Do you still hear me? Hello? Okay, raise your hand. Do you still hear me?
Yes, we hear you.
Okay,
Yeah, please
then
continue.
please go to the next slide and then the second next slide. Okay, the next one. This is on the history. We can skip. About the firms that are working in Ukraine. So we have Lind for chocolate, we have Syngenta for construction, Nestle for food, Allegro, I don't know, Credit Suisse for banking, of course, Davidoff, cigars, AXA for insurance, Swiss for flights. So these are all Swiss firms. When you realize them, you can think of me. We at the same time have firms like your flight company, Ukraine International Airlines, and like Nemirov, that are very, very famous in Switzerland. So that's just a little introduction. So what am I going to talk about? It's very important to realize that the CFC-tax rules, they are about controlled foreign corporations. So if you have, for example, BVI, Bermuda, a lot of other companies, even Swiss companies, all your foreign companies now are going to fall into this new CFC tax regime. And if you have a controlling stake, so if you have 25% or later 10% in a foreign company, you have to think about this new Ukrainian CFC tax rules, right? So these rules will now become part of your daily life. And these rules, it's important that the controlled foreign corporation tax rules in Ukraine, it's important to understand that you're not alone. These rules have been introduced in 40 other countries around the globe already. So in Germany, in Israel, in Russia, in Argentina, in 40 countries around the globe, these CFC tax rules already are there and are already applied. So, and they are more or less identical or even similar. So there are solutions how you can comply with these rules without paying a lot of extra tax if you restructure your holdings and your investments correctly, right? So don't worry, there are solutions out there, and we are going. I'll show you a few ideas and a few things that have worked in the past for other countries. Let's please go to the next slide, which shows you the agenda. It is important that it's a moving target, right? The CFC tax rules are something that have been popping up in 40 countries around the world, but it's not the start and it's not the end. It means that it's part of a development that goes into the direction of more tax transparency, together with the automatic exchange of information, of course, and it's also part of a big movement of more tax justice, and because the notion has arrived that some countries receive a lot of tax, and some countries receive very little tax, and also there are some countries that make business because they help people to avoid tax, right? So there are a lot of new tax laws out there that go into the direction of tax justice. I will show you a few points here. The second, just the major points of the CFC tax law, of course. very important case studies so that you get an idea of what you can do and what other people have done to tackle this issue. And yeah, of course, then the summary and the takeaways. May please go to the next slide. These are the bodies or the authorities in the world that drive the tax transparency movement. So a major body is like the OECD, right? The OECD is a powerful organization based in Paris. They drive all the tax transparency ideas through the world. Very important, the OECD is backed by the G20, formerly G8, and of course the United States, also very big drivers. And then we have also Gafi and Egmont, which are anti-money laundering bodies. So it's all about tax transparency and anti-money laundering. I'm not telling you anything new. So we can go to the next slide, I think, and skip it and then go directly to the next slide, please. Yeah, this one, exactly. So here you see in the Ukraine, I've been talking to you 2 years ago, in 2017 actually already. I've been in this room where you're sitting right now and talking to you on the draft law of the CFC-tax. And it's always, in the beginning, you think this draft law is really lunatic, it's really crazy, and it's never going to come. But now it's been there, right? And it will be applied starting from beginning of next year. So now it's really high noon that we have to do something. And for you and for your clients, we have to review now the structures and make them CFC tax compliant. Otherwise, yeah, we pay a lot of extra tax or we get a lot of extra trouble. So let's directly jump into the next slide. How is this law going to be applied? It's basically, as already mentioned, it's applied on all foreign companies that you and your clients have. So it doesn't matter what type of company it is. It is on corporates, on trust, on foundations, on partnerships, all types of companies that are held in another country, so not in Ukraine. That's a foreign company. Then is it controlled or not? That's a big question. Control means, in the first place, if you have 50% of more of the shares, that's a simple case, right? If you have 50% or more of the shares of a foreign company, you have it in control. So that's a simple case. It is also possible that you hold less. If you hold 25% of the shares of a company, or from 2023 onwards, 10% only. But other people in the Ukraine hold directly or indirectly also shares, and this amounts to altogether to a controlling participation, or to a control out of Ukraine. Then yeah, that's a so-called Ukraine-dominated company. So if there's a foreign company that is dominated by several people with Ukraine tax residency, that is also within the scope of the new Ukraine CFC tax law. It's very important to understand what is a share, because the definition of a share can lead to an exclusion from the law, right? So if certain financial instruments, for example, a loan, very simple, a loan or a bond is not a share. So with a bond or a loan, for example, and also with a number of mezzanine instruments, you cannot have control. So very often our clients use mezzanine instruments or a combination of mezzanine and loan instruments to restructure their investments in a way that it is out of scope of the new CFC tax law. So what is important that all these structures have to be reported and disclosed, and there are also measures like criminal liability and fines that people have to pay if they don't abide by the law. So there are measures. What is interesting, I mean, compared to other countries, Ukraine has not yet signed up for the automatic exchange of information. So for other countries, it's even more drastic, the CFC tax law, because it's combined with the automatic exchange of information. So the grandfathering is much more harsh, and it's in other countries like Russia, like Germany, like France, Argentina, all these countries that take part in the automatic exchange of information already, they really are under much more stress, right? Because they know that all the tax authorities in their countries get information at the same time, and they sometimes know more than the clients themselves, or think they know more, right? So then when these countries when the tax authorities get information, you have to explain them that it's actually completely different as what they think. So here, Ukraine is a little bit better off, but I understand that the automatic exchange is going to come soon in Ukraine, which means that yes, this has to be taken into consideration, and the sooner you get this CFC tax structuring right and correct, the better, because then you have less risk of with the automatic exchange. Let's please go to the next slide, dear Julia. Here, I told you that more than 40 other countries around the globe have similar laws, similar CFC tax law, similar or identical than the Ukraine one. Here you see what typically works and how risky it is. So on the left side you have the risk, right? The arrow with the risk, and on the bottom you have the arrow with the substance, which substance basically means that you have local directors, that you have meetings, quarterly meetings at least, and for example you have also authorization by the financial regulator. All these things amount to substance. You have auditors. So the more substance in general, one can say, the more substance for foreign corporations, the better. If you have real substance, if you have a real corporate governance in the foreign country, like for example Switzerland or like other countries, then it's better, and it will, as a tendency, be better and work better under the CFC tax rules. So here, just to give you a few examples, we start with a controlled trust and foundation. That is a structure that typically does not really work under CFC tax. It means the Ukrainian tax authority will look through it and will basically, then you have to tax everything in this controlled trust and foundation in Ukraine. So this will be fully in the scope of the Ukrainian tax law. But there are four typical measures or structures that may work well in the sense that you may not have to pay extra CFC tax in Ukraine on these structures, right? And so these are on the right side of this chart, the insurance wrapper, also it has a certain risk, the discretionary trust and foundation. Discretionary means that it has its own life and it's not controlled by the beneficial owner. Securitization vehicles are a good measure when it comes to CFC tax law because they are so-called orphanized. It means typically the shares that, and especially the voting shares, are with a trust or a foundation. So the beneficial owner, or like the person that set it up, is no longer under control for tax purposes of these securitization vehicles. So that's also a very good thing. And of course, one of my favorite instruments is a mutual investment fund. Why? Because a mutual investment fund is also orphanized, but the beneficial owner can control via the advisory board, can control very much, can control very much what is happening and what is done with his money. But at the same time, it's not the control in the sense of the CFC tax rules, right? So he has influence. He still has influence within mutual investment funds and can decide what's been done with it. But it's a very secure instrument because it's also authorized, right? A mutual investment fund is authorized by the financial regulator, and it's audited. It's supervised, and that means that the tax authorities do have to accept it as a CFC tax compliant instrument, but nevertheless, the beneficial owner can influence what it is, how his money is invested, and what projects are financed. So these are the four instruments. If you have any questions on that, I would really love to meet you and discuss about these things, how they can be set up so that they are CFC tax compliant. I started 15 minutes after 10, right? So I have 10 more minutes on my watch. I will now go to the 3 case studies. Let's please go to the next slide. Case study 1 is actually a foundation for a serious, I call it oligarch. Maybe it's better to talk about entrepreneurs. It's a serious entrepreneur who has, in the last decades, accumulated a wealth of 230 million. He had these things originally in Swiss bank accounts, but with like Seychelles, Panama, and BVI companies. And these Seychelles, Panama, and BVI companies would completely be transparent under CFC tax rules. So basically, he would have to tax each and every activity and write it in his tax declaration in Ukraine. So what he did already, or what we are doing for him right now, is we set up a new foundation. A foundation is nice because a foundation has a legal personality. Unlike a trust, it has its own legal personality, but it has no shares. And as the major focus on the control with the CFC tax law is the shares, it's a good instrument, right? Because it doesn't even have a share, the Liechtenstein Foundation. So how can you have a 50% or a 25% participation, a share participation, if you don't have if the structure doesn't even have shares? But at the same time, it's very important also talk about other forms of control, right? Because the CFC tax law also ask, are there other forms of control and management? So there are, for example, foundations out there where the management board, basically all three members of the foundation board sit in the Ukraine, and then you have a place of management in the Ukraine, and then it's basically a Ukraine company which is fully taxable in the Ukraine. So what we do here for this successful entrepreneur from the Ukraine, we set up the foundation in a way that there are 3 board members that know their business, that know also how to invest, right? And that are in Liechtenstein / in also one of them is in Switzerland, so that it's clear that it has enough substance. Yeah, what one can do is one can have underlying companies or underlying fund companies. So the Liechtenstein Foundation can be also combined with other instruments which allow the entrepreneur to influence his wealth management more in an advisory way, because with the foundation itself, it's very important to make sure that on the level of the foundation he has no influence and no control, because otherwise it would be an instrument that would be subject to CFC tax. And that's exactly what you probably would like to avoid. So this is case study number 1. Case study number 2 is the next slide, please, dear Julia. This is about 2 entrepreneurs. They have both together have a fortune of 65 million US dollar. They do a lot of alternative investments, so they do a lot of real estate finance. They invest in private equity, they invest in venture capital, and they also have a number of securities. So for them, they wanted instrument where they have a little bit of confidentiality when they do their activities, and we compared the different instruments, and it came out that fund was the best for them. So this is actually for another jurisdiction. These are Russian entrepreneurs actually, but the law is very similar. This is what we did 5 years ago, right? So there we have already 5 years experience that it works very well with the tax authorities in a Russian-speaking country. What is important here is, yeah, as I mentioned already, it takes a little bit of time to set up the company and to authorize it. But when it's authorized, you have like an official stamp on this instrument that an official confirmation that the substance is really there, right? Because no regulator, no financial regulator would authorize a company if it wouldn't have enough substance. So when the Ukraine CFC tax authorities, when they ask for substance, you can also always tell them, listen, this company has been even authorized by a financial regulator in, for example, Malta, Luxembourg, Cyprus, Liechtenstein, Cayman Island. So if the financial regulator in these countries, if they are fine with the substance, I think there's no point in the Ukraine tax authorities in saying, no, listen, this company doesn't have substance and it's actually controlled by you from Ukraine. So this is this authorization is actually something that can be very nice when you try to set something up that is CFC tax conform and compliant with CFC tax and without having to pay extra tax in the Ukraine. The next case study, if we quickly have a look on it, this is what already is there. is not the automatic exchange of information, but the so-called request for tax information. So Ukraine tax authorities can, under the double tax treaty with Switzerland, always ask this nice gentleman who sits in our tax authorities in Bern, in Switzerland. They can always ask, okay, we have a taxpayer in the Ukraine, and we would like to have a little bit of information. Very important, this information can only be obtained if there's a reason, and very important, what we did, or what happens from time to time, that tax authorities try to ask something if there's no flesh on the bone, so to speak, if there's no reason. So they just try to do some fishing expedition, basically. They have a belly feeling there could be something, but they have no facts, nothing. And if they try to do a fishing expedition and just give you a name and say, okay, tell me everything you know about this Ukrainian taxpayer, it's not gonna work. So here there are measures, legal measures, injunctions, and here we help our clients if there are fishing expeditions and if there's no reason to get this information, we can always file an injunction and stop such tax inquiry. That's case study 3. And so we already go to the next slide, and then we are nearly finished. I hope this has been interesting for you. As I said, it's not the end yet. It's a moving target. So it's interesting. Some countries are very far ahead already with the CFC tax. So there we can utilize the experience that we made with those countries already for your clients and for you as a taxpayer in the Ukraine. It's very important to monitor the developments. Tax law is always a moving target. It's always going to change. So you have to always think a little bit ahead. So very important also, it applies in 2021 already, or there's still some months ahead. I really ask you to now start and look into the structures that you have and make a so-called SWOT analysis. Have a look how it is, what are the weaknesses, what are the risks, and what we can do, what are the solutions that we can utilize. And then for the takeaways, I think that is actually, let's go to the next slide, please, dear Julia. For the takeaways, it's important. Switzerland has always been on very friendly terms and really likes all Ukrainians. We have even a lot of Ukrainians that live in Switzerland, and for the last decades, we have successfully worked together. So we should entertain this friendship and deepen it and intensify it now when it comes to the CFC tax, which is really a major challenge for everyone. Takeaway number 1. Takeaway number 2, you're not alone. So there are other countries that have gone through the pain, and we can draw on this experience. And number 3, there are solid solutions. I've showed you some of them, and together we will be able to work something out that is bulletproof and is like exactly tailor-made for you and your clients. If you turn to the last slide, here you see this lady with the sword. So this lady is going to help us also to protect against CFC tax. And if you want to talk to me, please utilize the number here on the last slide and utilize the email, or have a look at our website. You're very, very welcome. And I really would love to work with you and to get to know you. Thank you very much.
Thank you, Alexander. It's very positive ending of your presentation about this Iron Lady and protection of Ukraine. We hope that one day our Ukrainian legislation also will be implemented such mechanism as trust and securitization, security foundation, and etc. Alexander, are you online yet? Still?
Yes, I'm online.
Yeah. What do you
think?
Any
questions, please?
Yeah.
Let's talk about it.
Is there any questions in this studio? No. I have one question about what do you think about personal relocation and changing of tax residence? Will it help for individuals to avoid CFC disclosure rules?
Yeah, that's a wonderful question. That is, of course, always interesting. The risk with relocation is or might be if you have like all your business activities or many of your business activities in Ukraine, that or even your family living in Ukraine, that it is difficult to really relocate like fully, right? So, I mean, that's our experience. Some clients, for them, it's easy to fully relocate to Switzerland. They take the whole family simply, and the family is happy in Switzerland. So many clients really move to Switzerland or Cyprus or some other countries, and they really live a happy life there. And what they do is, okay, they just are in the boards. So they are on the board of directors. They don't work anymore and don't have anymore the center of their life in Ukraine or in the respective other countries. So that if that is possible, it's of course always a good way, right? It's always a good way. Sometimes or many times it's not possible. And then we talk about the case studies that we have. But of course, I mean, relocation is always like, of course, then you avoid all tax in the Ukraine, and also yes, of course, the CFC tax. That's absolutely yes. That's our experience there. I can agree with you.
Can you estimate the percentage of people who is willing to relocate or who is ready to find other solutions like 50-60, 50-50 or 60-30, 40?
Yeah, it's, I mean, it's typically, I would say, it's around 20-30% who really relocate, right? Who effectively really relocate, and then there's maybe another third, 20-30%, or let's say 30%, another 30% that like have a two-way approach, right? Because always in life you must have like a line of defense, a second line of defense, right? So the first line of defense is that they relocate, but they already know that the relocation is going to be difficult for them, and they still stay maybe 2/3 of the year in the Ukraine and still have family members living there. So for them, there's a risk that the relocation and the tax residency, lifting of the tax residency in Ukraine is accepted. So it's a risk that the relocation is really accepted by the Ukraine tax authorities. So that's why, in the same token, they have a second line of defense. They restructure their investments and their Swiss bank accounts and their holding companies in a way so that it is CFC tax compliant, right? And there's like the last third of the people, for them relocation is really no option, and so they just do the relocation, the restructuring, that we talked about, and maybe they get some additional Dubai tax residency, Israel tax residency, also they never go there, right? So it's just like a little bit of extra window dressing that can help a little bit, but in the end, it's not really like a sustainable thing, right? This type of window dressing type of relocation.
Alexander, many thanks. И мы продолжим. Вопросы, которые я задавала, они плавно переходят к теме следующего спикера. Константинос Theophilou. Константинос является управляющим партнером компании Theophilou LLC и специализируется на предоставлении, на работе с программами инвестиционного гражданства, вида на жительство. Сегодня Константинос расскажет о кипрской инвестиционной программе и ее преимуществах в сравнении с Мальтой, Великобританией и Канадой. Constantinos, can you hear us? Good morning.
Good morning. Hi. Can you hear me?
Yeah, we can hear you. Nice to hear you here.
Yes, it would be even greater if I could manage to attend in person, but unfortunately, COVID changed our lives and we cannot travel so freely anymore.
Yes, this year is incredible and completely difficult for everybody. But you're welcome, please. You can start your presentation.
About changing the slides, I will tell you and proceed to the next, yes? So this is a photo of my hometown, Limassol. Our firm was established in Cyprus in 1976 by my father, still an active lawyer. My sister and myself both followed his footsteps and became lawyers. And all together now we continue with his legacy. Can you please move on to the next slide?
Yep, please, Constantino, you just tell next slide when you need the next one.
Okay.
Okay, thank you.
So we take genuine interest in our clients to understand their objectives, and our mission is to meet and exceed our clients' expectations, and we dedicate ourselves in offering these services to them and to these values. Next slide. I will speak a little bit about our firm and the types of services we offer before I move into my subject today. We are a family law firm, and we offer both litigation and corporate services to our clients. We specialize in litigation, corporate and fiduciary services, shipping, contracts, and real estate related services, as well as citizenship and residency acquisitions program. We are a member of an international law firms association with currently having 75 members in about 72 countries. So in this way we can offer our clients support at any given moment at most of the part of the world. Next slide. So I cannot see if this is the correct one. Why work with us? Our success is driven by our commitment to provide high quality services. We are honest and professional in what we do, and we try to create new relationships with our clients and maintain long-lasting relationships with both local and international clients. Next slide, please. Our main services is litigation, company commercial, admiralty maritime, immigration, migration, real estate and property acquisition, contracts, family law. We do also international tax planning, funds, foundations, wills and estates. Next slide, please. So this is where our little island is situated. It's in the crossroads of Europe and the rest of the world. We believe this has been the major drive for the corporate section being developed and successfully over the years in Cyprus. We have a very strong shipping presence with the Cyprus flag regime and the gross tonnage tax system, which has attracted the interest of major shipping companies, which opted to receive the Cypriot flag for their vessels. We have the lowest tax on ship management companies, and this has brought them all down to the island. Next slide, please. So corporation and full domiciliation and management services in Cyprus for companies, businesses or persons. There are various tax incentives both to individuals and to companies to establish the tax residency in Cyprus or to incorporate the Cypriot company, which will enable them to be active and do business globally and to Europe. Cyprus has signed various double tax treaties with a lot of countries, which enables owning of a Cypriot company to have the lowest tax rate in Europe. Next slide, please. Dividend payments, tax incentives, dividend payments made to non-tax residents of Cyprus, there is no tax at all. Loyalty payments, if they're rightly used, then and paid outside Cyprus. Next slide, please. As I said earlier, we are very attractive as a jurisdiction for shipping companies and ship management companies, which pay 4.25 tax on profits from the ship management. And there is no tax on profits from ship owning. Next slide, please. So coming now to my main topic, which is a comparison of the Cyprus investment program and the acquisition of the Cypriot passport in comparison to the Maltese program, the Portuguese, the UK, and the Canada. When it comes to the time to acquire the passport, provided that the applicants have followed, of course, the procedures and applied in the respective jurisdiction. In Cyprus, the time to acquire the Cypriot citizenship is 12 months. In Malta, it's about 14 months. In Portugal, it's about 6 years. And UK citizenship comes into 5 to 6 years. And as regards to the Canadian citizenship, it's 12 months, provided that the applicants have managed to convince the authorities that they should be granted to one. The Canadian Investors Program has been changing rapidly in the last years, and currently they offer the citizenship through an investors program with a minimum investment of Canadian dollars 1.2 in a government guaranteed investment, and the financial investment with the Canadian dollars to 1.2 million with a 62-month term loan from a trusted bank. There is another requirement that has recently came into force, that the investors should provide proof that they applied for the Immigrant Investors Venture Capital Pilot Program, which requires the investor to be of a net worth of $10 million and to proceed with the investments, as I mentioned earlier just now. And the investment has to be, another investment of 2 million Canadian dollars has to be placed into the Immigrant Investor Capital Fund and maintain the investment for 15 years. Coming to Cyprus, we have recently, we moved into the UK citizenship program. So they have a different tier of investors programs, with the first one being a tier 1 investor with a £2 million and to settle in the UK for 5 years duration. 5 million pounds with the requirement to settle and reside in the UK for 3 years. And we have another investment of 10 million English pounds with a requirement to settle in the UK for 2 years. So as the amount of investment increases, the duration of time that you must reside in the UK in order to receive the UK passport is reduced. Coming now to Portugal, there should be 1 million investment of euros in acquisition of real estate with construction completed at least 30 years ago, which means that there is a restriction to older premises, and it has to be located in an urban rehabilitation area, which the execution of works, has to be 1 million euro invested in real estate, and this amount is reduced to 350,000 if the investment goes into a rehabilitation center, and then it's reduced to 50. There is another option for artistic and cultural investment of requirement for 250,000 euros, which has to go into a fund supporting artistic productions and sustaining a national cultural heritage. This is only available when it is accredited institutions and in authorized and approved projects. There has to be another investment of a minimum of 350,000 euros in Portugal regulated funds dedicated to the capitalization of companies. The investment type is conditional to the company, and it must be at least 60% a Portuguese registered business, and the majority of its units to be no less than 5 years old from the date that they are purchased. Now, the Maltese program, you must buy a property of at least 350,000 euro, or lease a property for 5 years for a minimum annual rent of 16,000 euro, plus to donation to 650,000 euros to Malta's National Development and Social Fund, and investments in of 150,000 euro in government bonds. Coming now to Cyprus, which has taken a lot of heat lately when it comes to its Cyprus investment program. There are a lot of opinions why this has been happening. I say that it has been targeted because it had acquired huge interest by the majority of the investors who opted to choose the Cyprus investment program over the equivalent programs from Malta, Portugal, UK, and Canada. So in Cyprus currently, with the latest decision of the Council of Ministers, the investor has to make is 2.5 million euros in real estate. Previously, the investment was reduced to 2 million because the investor could have purchased one unit, a home, a residency of 2 million euros. Then the requirement for an additional 500,000 euros would not be important. But as it stands now, the amount is 2.5, and there is an additional 200,000 euros which needs to be invested in two funds. 100,000 euros must be invested in the Research and Innovation Foundation Center, and 100,000 euros out of the 200 must be invested in four government control funds: the Institution of Research and Innovation Fund, the Industry and Technology Services Fund, the Renewable Energy Sources and Energy Conservation Fund, and the National Solidarity Fund. Next slide, please. And the second next again. So when it comes to maintaining the investment in each respective country, in Cyprus, previously 5 years, now the investment duration is increased to 7 years, which the investor must maintain his investments. So what this means is that the investor must hold all his investments for a period of 7 years, and then after the lapse of the 7 years, the investor may sell and annihilate and to transfer out as he wishes all the properties or all his investments that he had made in order for him to acquire the Cyprus passport, and that would mean that he would no longer need to have any investments in Cyprus to maintain his citizenship. In the event that an investor transfers or sells or mutilates any part of his investment upon which he had acquired Cyprus citizenship, the authorities may revoke the citizenship and request the investor to return his passport. This applies in all countries. In Malta, this limitation remains at 5 years. In Portugal, the same, as well as in UK and in Canada. Now, when it comes to the assets, the investors may invest in. In Cyprus, it is the investors may invest in real estate, companies, and funds. There are special funds which are created specifically for the Cyprus investment program, on which the investor may not sell his units for a period of the 7 years, which is the time that he must maintain his investments as per the Cyprus investment program. There are, of course, possibilities for the investors to sell units in a particular fund and purchase units in a different fund, as long as the main criteria maintains the same. In Malta, the investment the investors may make in order for them to acquire the citizenship is in real estate, and as I mentioned previously, they must invest in the National Development and Social Fund and other government bonds. In in Portugal, it stands the same as Cyprus. So the investor may opt to choose either real estate or companies, as well as in UK, and in Canada it's real estate and government bonds. Now, when we say companies, we mean that the investor must actually inject funds and into the company, and to have the company's capital be increased for the equivalent funds that was injected into the company. And there has to be proof that all the funds have originated from abroad. When it comes to actually the investor, any restrictions when it comes to his physical presence in the country after the acquisition of the citizenship, in Cyprus there is no such requirement. So after the acquisition of the Cyprus passport, the investor does not have to come to Cyprus or reside here permanently or whatsoever. In Malta, it is the same. In Portugal, there is a small restriction that the applicants must at least visit Malta for 7 days per year. Otherwise, their application may be rejected and revoked. In UK, there must be 45 days for the first 450 days for the first 5 years, and 90 days for the 6th year. In Canada, for the whole duration of the 5 years investment duration, the applicants must reside for 1,095 days in the 5 years that the investment will hold. When it comes to traveling, the holders of Cyprus passports may travel visa-free to 172 countries. When it comes to the Maltese Cyprus residency holders, the Maltese investor may travel to 184 countries, including EU, USA, Canada, and the UK. Portuguese passport holders may travel visa-free within the Schengen member states. UK passport holders may travel visa-free to 164 countries, and Canadian to 172 countries. Now, when it comes to holding a second passport, everybody, all the investors that we have come across are in their majority, they would opt to acquire the second citizenship so that they have higher and more flexibility when it comes to traveling. or when particular tax benefits arise when it comes to acquiring or basically changing their tax residency from their current tax residency in their respective countries that they're living. What I always say to every person that I meet is that all countries basically offer more or less similar investment criteria. There are minor changes, restrictions, and when it comes to choosing the right country to apply for and acquiring a second citizenship, it should be evaluated by a few criteria, mainly how they feel in living or traveling to this country more frequently, what tax incentives this country is offering, what are the restrictions and that suit best their needs and their targets, and whether or not these will make their life overall more happy. So we have in Cyprus a lot of Russian investors who are choosing to receive the Cypriot passport primarily because of the tax incentives they have when receiving the Cyprus nationality, and currently with changes in the Cypriot with the Russian double tax treaty, we see that there is a higher demand for the Russians who are choosing to apply for the Cypriot citizenship so that they can become tax residents of Cyprus and thus avoid the tax implications that they could possibly have in Russia. I have no more comparisons to make between the two programs. These are the main principles, main criteria that investors must comply with in order to receive the programs. In each country, when an applicant receives the Cypriot the equivalent passport, then the family members can also apply together with the investor, meaning the spouse, the children, underage children, or children up to 25, which are still dependent by the applicants. In Cyprus, we have recently included the father and mother of the applicant, as well as the father and mother of the spouse, who can apply and acquire the Cypriot citizenship through the investors scheme by an additional requirement of 500,000 euros worth of residency that the parents should hold. That is all from me. Next slide. Thank you for listening. And next slide, please.
Constantinos, thank you very much. It was interesting. Basically, now Ukrainians have options, not only Cyprus residency programs, but also get information about Malta, Portugal, Canada, and the UK. Thank you very much.
Thank you. Enjoy the rest of the conference.
Знаете, одной из достаточно новых индустрий и даже новых рынков является индустрия блокчейна и финтех. Когда в 2016 году я знакомилась с этой индустрией, я как скептик и консерватор, для меня это было что-то, где-то что-то, да, вроде бы интересно, но непонятно, страшно. Хотя интуитивно я понимала, что действительно это новый рынок, и здесь есть будущее. Украина развивается в этом направлении также. Недавно создано Министерство цифровой трансформации, которое призвано как раз регулировать рынок виртуальных активов и расчета с помощью криптовалютами. Но передовой опыт, наверное, здесь все-таки у европейских странах, таких как Мальта, Швейцария и, конечно же, США. Наш следующий спикер, Justine Scerri Herrera, поделится с нами о том, как инвестировать и зачем, и почему инвестировать в индустрию финтека и блокчейн. Justine является управляющим партнером мальтийского отделения МК Финтек, которое как раз и специализируется на криптопроектах, блокчейне и инновациях. Justine, good morning.
Hello, good morning. Thank you for having me. Could you please put up the first slide?
Yeah, you're welcome.
Thank you very much. So good morning, everybody. UBF, thank you for the invitation. Attendees, I hope you're having a good conference and a good Monday morning. As an introduction, my name is Dr. Justine Scerri Herrera, and I work for Michael Kyprianou Fintech Partners, which is a Malta-based entity forming part of the Michael Kyprianou Group, where I work in advising and licensing and also researching in the areas of fintech, financial services, and investment services. I am also a member of the think tank, which is a digital economy task force set up by the Ministry of Finance. So it is a government arm, where I advise the government on how to implement certain technologies and which technologies best fit in the public sector. Just as a quick statement, a disclosure statement, none of the companies I will be mentioning are for marketing purposes, and I don't have any interest in them. And also, none of the following should be taken as investment advice.
Yeah, just a small remark. Please say it next slide when you need to go forward. Okay.
I'm just going to say the word slide. Thank you. Perfect.
Thank you.
The pandemic has reminded us that we are all a part of something bigger. It has instigated a deep realization that we are all, in fact, deeply connected and highly interdependent on each other. Many agree that the virus has been a sort of wake-up call for businesses and governments worldwide, and that, unfortunately, the virus has revealed that our markets are very, very fragile and our supply chains are very easily disrupted. So unfortunately, as a consequence to this, the long-term value and profits of many shareholders have and will be affected, and many may diminish because of the disruptions to employees, to consumer services, customer behavior, supply chains, government policies, and society at large. So due to these disruptions, the intrinsic value of so many companies, especially traditional companies, have decreased and may continue to decrease drastically. One question on many persons' minds is, has the pandemic caused people's social consciousness to wake up? And on a more positive note, could the potential silver lining of this devastating crisis result in an accelerated transition to a more circular, a more resilient, a more inclusive, sustainable economy? Slide. So, what are the, well, definitely short-term and also potential long-terms of the pandemic? Some socio-economic trends which have emerged and which may continue to emerge include, firstly, the working from home. Businesses have imposed working policies on their employees, which has resulted in less commute, in less travel, in less company expenses, so no physical office, no equipment. Another effect is undoubtedly travel. people's perceived freedom of travel is definitely distorted. Borders are closing, quarantine, things are always changing. So a long-term effect of this could result in people's desire to travel be decreased. They get used to holding virtual meetings. Also, people may not think it makes sense anymore to spend a huge amount of carbon footprint and endure jet lag for just a relatively short meeting. So we are seeing a change of behaviors and also a change of desires. Another area which undoubtedly has moved mountains is e-commerce. Overnight, companies were forced to shift to digital, so go digital or you'll simply be left behind. And of course, when we are saying go digital, there's a lot of operational aspects in place. Do you have a website? Do you have payment integrations? Do you have IT security? Does it make sense from a revenue point of view? So this is a shock effect to many businesses all around the world. And we are seeing a shock effect in all sectors. So from medicine, you have telemedicine. From education, you have e-learning. From signature, you have e-signatures. And certain companies, for example, DocuSign, which many people probably think is a relatively new company, was actually formed in 2003. So its growth has only accelerated due to the accelerated trends. Also, as another crazy example is Amazon has hired nearly 200,000 people in the first quarter alone, just to keep up with consumer trends. So we are seeing a change of consumer behavior, attitudes, and also expectations, which from now on will definitely change the way that businesses operate from now on. Slide. So here I have put up a photo, which maybe some of you recognize, Back to the Future, just purely because the pandemic has forced the world to fast forward 5 years and accelerate a lot of these digital technologies and innovations which were already in place. So we are seeing the rise of Fintechs, of RegTech, InsurTech, IoT, cloud, blockchain, crypto, just to keep up with consumer demands. So we are seeing transferring to digital, increased automation, and in a nutshell, nations are all becoming digital economies. So we are truly experiencing a technological revolution. And I really doubt that consumer trends and behaviors will not go back to the status quo that they were, because you don't go back, you just move forward in society. On the downside, we are going to see a decline in traditional companies. In fact, the WHO has stated that there will be a decline in dividends worldwide between 20 to 30%. And big companies, traditional companies such as the Royal Dutch Shell Company, have announced they have cut their dividends for the first time in 80 years. So this also shows us that we are moving towards a more sustainable, more green products, from transport to infrastructure. And now that the environment is on government's agenda, this will have a roll-on ripple effect for consumers and businesses worldwide. We'll see a decrease in oil, but maybe an increase in precious metals such as cobalt, which produce electric cars, or hydrogen, commodities such as gold and crypto, instead of fiat. So that is really the direction that we are heading in. I mean, every day I read something in the news, in Bloomberg or wherever, saying Thailand has closed its national parks because they want to take care of the environment. Zimbabwe is banning mining. So now it's on the government's agenda. This is truly going to have a ripple effect. Slide, please. Although many businesses did have business continuity contingency plans in place, no person or company could have really predicted or expected a pandemic, and that they needed to make overnight changes in order to survive this pandemic. Companies' main focuses were primarily two areas. We have revenue protection and we have customer retention. Also, in addition to that, it was all about how are we going to leverage new business models, how are we going to digitize, how are we going to automate, how are we going to integrate certain logistics, payments, IT, delivery. And many companies, especially traditional companies, really saw leveraging new models and investing in technology as a cost and not as a long-term investment. So it's even the mindset which needed to change. Over here, I have put two diagrams. The first diagram shows the normal life cycle of a company. Many companies actually do not maintain the growth stage because they will not be on the ball and have their eye on competition, and they will take for granted certain external factors relating to, let's say, digital innovation. So they wouldn't know what innovation tracks are looming. So it's because they do not reinvent themselves, they do not adapt. Probably one of the only companies which has made it to the other side of the curve is Netflix. Netflix was one of the only companies, so it started from making DVDs, and it caught on to the technological direction and trends, and it shifted to online entertainment. So it really did reinvent themselves in comparison to, let's say, the person who invented a typewriter did not move on to reinvent itself to the computer. The second diagram shows the S-curve, the normal S-curve, and the pandemic S-curve. So because of social distancing, lockdown, restrictions on travels, this has really accelerated existing disruptive trends. So overnight, to keep up with consumer trends, all these businesses have just shot up. And the share prices in companies such as Zoom and Slack have completely skyrocketed. And the widespread adoption for fintechs and contactless payments also has completely skyrocketed. A slide, please. Yes. In the next diagram, I basically put up a diagram from CB Insights, which shows the top fintech 250 companies. These are definitely companies to look out for. They have raised a combined amount of funds of 49 billion euros across 900 deals. So as you can see, there's many markets covered for these digital innovations, from healthcare to compliance to crypto, to blockchain, to capital markets. So we're seeing that digitization happen in many sectors all across the board. Also notably, in relation to the top FinTech 250, which was cited by the same source, CB Insights, all the companies in the top 250, FinTech 250 of 2018, none of those companies have died, and many have actually moved on to go public or become acquired or raise even more money. So they are definitely some companies to look out for. Slide, please. So another really impressive technology which has practically grew legs at this stage is blockchain and DLT. So many companies, from banks to governments to the Big Four, are adopting and implementing and pushing the use of this technology. And this is because it has really shone through during this pandemic due to solving and creating many solutions and problems which have caused major disruptions. So for example, when it comes to contact tracing and other healthcare purposes, it has been adopted. Also, governments are partnering up with big tech companies to leverage their consumer base in order to provide solutions. So for example, in China, WeChat have been used to offer a QR code, which should be like a badge of health during this COVID pandemic. So the government is leveraging the services of WeChat because of their consumer base. Also, when it comes to trade finance, trade is truly the lifeblood, the lifeline of any modern global economy. And each year, hundreds and trillions of dollars in goods and assets and credit and money is changed hands in support of global trade. The WHO stated that global trade could decline up to 32% due to this disrupted trade. And in come certain really impressive blockchain companies to the rescue, and in this regard. There's a network called Marco Polo Network. I'm not sure if any of you have heard of it. And this is basically combines some big blockchain companies like R3, Trade9, big banks, JP Morgan, Bank of America, Microsoft, IBM. These are all forming part of the Marco Polo network. And these basically connect all the key players which there are in the supply chain and automate and streamline the processes. So connected to supply chains and trade financing. So this is really revolutionary in that regard. We're also seeing very, very big partnerships evolve and big merger and acquisitions. So for example, WHO and IBM have created a certain blockchain for certain purposes. Marco Polo and MasterCard, JP Morgan selling quorum software to Consensus. So a lot is going on, and we will see where these partnerships will lead. Another aspect is decentralized finance. So capital markets, raising capital. Companies such as Chainlink are providing solutions, which is termed the Oracle problem, whereby they are extracting external data relating to the trade or pricing data or certain services related to trading and connecting these parties and services on the blockchain via APIs. So this is going to result in a seamless way of connecting interoperable systems. So that is where the direction that we are headed. Also, we have seen a lot of big movements when it comes to crypto and blockchain, cryptocurrencies. Now the market cap of crypto is about 208 billion. Some of the most popular cryptocurrencies include BTC, ETH, XRP. So many persons are purchasing crypto really, I think, could be as a sort of safe haven in case banks fail, just like they did in 2008. Also due to inflation. We're also seeing negative interests in Germany. And in fact, it is the German banks which have started to offer crypto custodian services. Big banks such as JP Morgan are purchasing Bitcoin and keeping them as reserves. So this really does actually show a lot. We're also seeing the acceleration of central bank digital coins. This could be because Libra is on the horizon, or it could be because if these cryptocurrencies are adopted, the bread and butter, i.e. money, of governments could be at risk. So cryptocurrencies and blockchain are really moving at a fast pace as well. In fact, the EU have announced that they will be allocating 100 million euros for funds for promising blockchain products. So even high level are implementing and pushing. Slide, please. So, heading towards my conclusion. Where are we headed? We are undeniably headed towards a digital economy, and interoperable systems, and interoperable digital economies where all these systems will hopefully be connected to each other. And we will go to a plug-in and play scenario instead of a chessboard scenario and move away from fragmentation. We are also definitely moving towards a sustainable and green economy. Many governments have realized now, okay, we know the need to take care of the earth. So this will result in new interest for cleaner forms of transportation, infrastructure, the adoption of cobalt and hydrogen versus oil. Obviously, as I said, the rise of Fintechs, data, optimizing data and alternative sources of data, which can predict future trends and patterns, is undeniably also gaining traction. So in terms of investing, we are definitely moving towards ESG, environmental, social, and governance investing. So less oil, less airlines, less traditional stocks, more metals, gold, cobalt, tech companies, pharma companies, insurance companies, cybersecurities. So that is the general feel. Also, over here I have put up a diagram which shows the top performing funds in Europe. And as you can see, the underlying assets include pharma, include technology, include precious metals. So this confirms the direction. Slide, please. So now I would just like to spend a few minutes speaking about setting up or applying for a license in Malta. if you would like to form part and lend yourself to the infrastructure which we are heading towards a global economy. So first we have Fintech and the financial services. Malta is actually home to the country, which is the third most popular when it comes to payment services licenses. E-money license, payments institution licenses. I think first is London, where now, because of Brexit, we're seeing a lot of countries passporting their services and moving out of London. There's a couple of other ones, but Malta is definitely up there. Also, we have a lot of initiatives by the government and regulators launching sandboxes environments for persons to test their products. The second sphere, the second arm from this digital sphere is when it comes to crypto and DLT licenses. So Malta has labeled itself as crypto friendly. We have seen many applications being launched last year for crypto exchange, so for on and off ramps from fiat to crypto, for broker licenses, custodian licenses. So of course, this is a relatively new law and area. However, last year we have seen the submission of multiple licenses. Notably, we have a lot of big companies which have chosen Malta as their base, from IBM to Tipico, Credirax, Microsoft, Status, Exante. So these have all chosen Malta as their base. And also when it comes to investment services, Malta is home to over 600 funds, 180 AIFs, 350 PIFs, 100 UCITS, and around 15 billion of assets under management. And why, so slide please, and why have all these companies chosen Malta, besides of course that there are licenses and regulation in place? So there are some ancillary benefits of setting up in Malta. Firstly, the English language, so regulators, CSPs, banks, everyone deals and speaks in English. In fact, we are bilingual by constitution. We are part of the EU, so any services may be passported to all other 27 EU countries. We are known to have a friendly regulator, so the licensing procedure is quite an open and formal experience. When it comes to tax, we have an effective tax rate after the necessary rebate of 5% corporate tax on dividends for non-resident shareholders and 0% corporate tax on holding companies for non-resident shareholders. We also have good tax structures when it comes to funds. When it comes to residency and citizenship and visa programs, Malta has an investment program which is approved by the EU Commission. The investment amount is about 900K. The average time to get the passport is about 12 to 14 months, and it's valid for 10 years. Over here on the right, I have put up a table which is sourced from citizenshop.com, whereby they have rated Malta as the #1 country to get your citizenship investment program for 2020. And lastly, Malta is a very sunny island. It's sunny all year round, 300 days of sunshine. So that is just really a bonus. Last slide, please. And lastly, how is Malta faring post-COVID? How is Malta's economy going to be affected? So this is a statistic from the IMF, an International Monetary Fund, taken about 2 months ago. And the IMF have projected that Malta will actually be the least affected country in terms of economy, and the country which will bounce back the quickest next year from all the European Union countries. So of course, that is always nice to hear, and I hope that that situation will remain. So last slide. So thank you for listening. I really hope that I provided some value and some great insight. I usually prefer to speak in person. However, I still really enjoyed sharing my thoughts and presenting to you. Feel free to get in touch. My email and my LinkedIn and my contact number is on the board. And also, if you'd like me to share the slides with you, I have no problem in doing so. Have a great conference. Thank you very much.
Thank you very much, Justine. It was very interesting, and in my opinion, Malta is the most friendly to innovation and blockchain and cryptocurrency. As I searched some countries like Isle of Man, Gibraltar, Switzerland, and the US, it seems that Malta will be runner of innovation and crypto. Thank you.
Thank you very much. Have a good conference. Ciao, ciao.
Сейчас предлагаю прерваться на кофе-паузу, и в 12 мы продолжим, будем обсуждать кики и что с ними делать на национальном уровне.
Из-за технических неурядистов в начале, то давайте, чтобы хватило времени выпить кофе, в 12:10 мы начнем. 12:10. Мы просто немножечко позже. Спасибо всем. Здесь ребята регулируют. Все, спасибо. Вообще, давайте тогда в 12:10. Спасибо вам большое. Не будет много. Вы свое не нужно ничего сокращать, мы просто так постепенно там на 10 минут уедем, а там потом в обед.
Друзья, будем продолжать?
Тебе еще 15 минут.
Так, 1,5 часа до обеда.
So we do have around 1.5 hours before lunch, so let us be effective. So this session will be opened by myself. My name is Lana Golian. CFC, time to prepare. CFC, is it a problem or this is an opportunity? You know, Odysseus has a classification of managers, 4 types: producer, administrator, entrepreneur, and integrator. Depending on the type of people types, they understand problems differently. For instance, entrepreneur, they see opportunity in any problem, any challenge. For myself, we try to find solutions and opportunities in any challenge. That's why CFC we tackle not as something negative, but as an opportunity to change something. And to change something in this life, to become better. We have 4 partners dividing shares. I am Natalia Redchenko, Denis Ovcharov, and Ruslan Redko. Denis Ovcharov is an expert in business protection matters. In our stand you may have all the necessary advices. So if you already are written by Forbes, and that's a great step for you. Ruslan Redko is managing partner. He will have a presentation in Hall 1. He will be speaking about compliance and what beneficiaries of Ukrainian and non-residential companies should be prepared for, and how it depends, how it influences the monitoring, financial monitoring. Natalia resided in Poland. We have rep office there. Now, Polish office is involved in registration and support of companies, both legal and accounting support. So if you are aimed at relocation or opening your business in Poland, then you're welcome. I am involved in tax planning starting from 2001. When I just familiarized with the offshore industries, many customers, they said it is difficult now to work with them. It is very, expensive to open accounts, etc. Before it was nice. You buy offshore company for $1,000, you open your bank account, nobody asks you why, what is, where is your agreement, where is your contract, who is the beneficiary owner. Since 2007, everything has started to be aggravated. Till 2014, there was certain easiness in the transactions, so you didn't have any difficulties with the banks, with justification of many things, but lately everything has become more difficult, and the reason is BEPS, CFCs, etc., and many other difficulties in entrepreneur's life. What is BEPS? This is a plan of fighting against aggressive tax planning. That plan was developed in G20 summit. It was presented in 2020. In the framework of this plan, they set up 15 major tasks. Every country should implement them in their fiscal legislation in order to optimize tax planning. There is a treaty shopping as a definition. Have you ever heard about that? This is how to find a proper convention with the most favorable regime. Until now, when structurizing tax planning, we were based on what is the best rate, what country will be best for setting up company in order to put a stake on tax benefit. So you have 5%, you have 0%, so we'll travel to 0%, okay, etc., etc. So treaty shopping, this is the definition of this process. When we are planning restructuring based on tax optimization, we try to understand what jurisdiction will be better to set up your company, not because of investment attractiveness or something like that, but mostly based on which agreement with what country is the best one. So next item is controlled foreign companies, or CFCs. The major trend here is that taxes should be paid in the same place where the product is manufactured or where the product is sold. So in the country where the company is registered, in the country where the company is selling their products, this is a concept of business should pay the same in the same place where it earns. So, what is the principle concerning physical persons? If a person is tax resident of any country, then he should pay taxes in the same country. This concept was introduced by Americans. In 2010 they introduced this new law, and American government ordered all the fiscal institutions to report what amount of assets are stored and where in the world. After that, the US fiscal system has an opportunity to withdraw taxes from that, or put taxes on. So EU traveled the same way. They introduced common reporting standards. The nature of that standard is that in world financial institutions should identify the beneficiaries of the companies, and then if this beneficiary is not a tax resident of the country where his bank account is open, he should inform competent authorities what amount of assets or funds he keeps in his account. So there is a rule of CFC, and unless this rule is in place, the national regulator does not have mechanism to control over such income or to impose tax over such income. So, of course, the CFC was only a question of time. And if we go into backdated and remember the very first law on foreign companies was published in the Ministry of Finance's website. They listed the list of tasks to be implemented, and today we only waiting for joining to CRC standard, CFC standard. The legislation over CFC companies is in place. Again, recognizing of foreign companies as Ukrainian residents as well is in place. Very strict control over transfer pricing is in place in Ukraine. Treaty shopping is present in Ukraine. And we have a lot of other things. Speaking of CRC, our government in 2015 said that yes, we are joining that. We expected that from the beginning of 2020 will be exchange of information. They changed tax legislation, they introduced FATF rules. I believe that 1-2 years and CRS in Ukraine will work. As soon as CFC in Ukraine starts working, the tax inspection will have enough instruments in order to control and collect taxes from Ukrainian residents. What to do? Today we had certain solutions. One of the first and immediate option is to move, relocate, change your tax residency, but it is not comfortable for everybody to collect your family and grab them together and leave this country for some other. Again, not everybody is ready to feel as alien in any other country. Third, climate. Many programs, a majority of programs giving you right to be tax resident. Many countries of that, they are hot countries, and Ukraine is more moderate climate country. And again, the issue of taxes. Many people that can consider Ukraine as highly taxed country, they are wrong, because in Europe the taxes are high. I know Ukrainians, Russians living in Spain or France, they still keep the tax residency as Ukraine or Russian Federation, because the level of taxation is lower there than in European countries. The second option is to hide yourself. Like, I find beneficiary owner, I appoint him as my company CEO, and nobody will find me. But you know this saying, so sooner or later everything becomes clear. So a third option, you must be prepared, or you prepare beforehand. So we are based on the notion that you should not hide yourself, because sooner or later they found a skeleton in the cupboard in your activity, so you should be ready to disclose information about yourself. Here we try to understand the experience of our neighbors, like Russian Federations. CFCs, they introduced in 2015. In 2016 they had first wave of tax amnesty in 2018-2020. They ran and finished or completed the third wave of the tax amnesty. And only some thousands of physical persons, they disclosed themselves as foreign companies owner. It was 11,000 or something like that. So we don't have the clear information about the third wave, but the number of residents was much smaller. So trends. Many Russians, they started to get out from Russian residence, tax residence, and the second wave, they introduced CFC's standard. Everybody understood that it is better to disclose everything immediately than afterwards to pay fines, etc. So the second wave was more efficient. As for the third wave, it was a very dramatical case when the tax declaration was used by the Federal Service in order to incriminate his liability related to some other criminal proceedings, criminal litigation. So in spite, or say instead of using this information properly, this fiscal agency, they use this information for even higher punishment. So in Ukraine, CFC absence is probably only one limitation factor against full disclosure and about banking accounts balances of Ukrainian citizens. So what solutions we have found, and we discussed with our customers: liquidation, or putting your assets into trust, or changing of tax residency of Ukrainian citizen, reorganization, restructurization, 5 major steps, or changes in tax residency. It is not a simple way. In order that Ukraine do not consider you as a tax resident, it is not enough to have tax residency in another country. It's absolutely not enough. If your family lives in Ukraine, if you have your business in Ukraine, if you have a place of permanent residence in Ukraine, and if you are registered as sole proprietor in Ukraine, then Ukrainian tax inspection will consider you as a tax resident of Ukraine, in spite of the fact that you have a certificate that you have tax residency in Cyprus, Malta, or some other country. Again, nobody lifted up 183 days within one calendar year. So liquidation, the grounds for this has an article in our tax code telling that if there's a decision on company liquidation in 2020 and the company liquidated till the end of 2021, then the income obtained as a result of this liquidation should not be, is not taxable in Ukraine. This is law number 466, major changes, and second law is 786, that is already in force. 786, law 786, this is already in force. So we have monitored the discussions in voting for and contra this law. So they were discussed who and how will be exempt from this tax on the income. So the taxes on personal income taxes are lifted, but not lifted the military fee. So if you have a foreign offshore company that was worked as a wallet and they didn't have any direct activities with Ukrainian companies, if you could justify the income sources for this company, if this company was not involved in gray, black, or some other schemes, you may announce you've had this company, prepare a decision of liquidation, prepare a financial report, show assets in this report, the assets that should be liquidated. But there are a lot of nuances and difficulties. For instance, it depends on jurisdictions. For instance, in Cyprus, as in other countries, they have several options. First, the company just struck off, and it is not for us. Secondly, is voluntary dissolution based on certain requirements. And 3, liquidations with appointed liquidators. Why this solution is not good? Because you don't know what company and in what register will be crossed over. As in a liquidation process, a liquidator is appointed, the liquidation balance is stricken. So this is demanded by Ukrainian legislation in order to confirm that this controlled entity will be responsible for income.
Whom this option wouldn't fit for? So this because of the trade or providing some services, or one can trace the connection with Ukraine. Why? Because one of the changes in 460 just is the extension of the period. So you declare liquidation of the company, say yes, you receive the assets of this company, but it turns out that this company was operating in connection with Ukraine. You didn't provide the reports, or you didn't announce that this is your control company. As a result, in retrospective of 7 years, you face some unpleasant matters. To apply this option, one should be cautious and should evaluate it just cautiously, but it is up to you. The next option, trust. Probably it's a long-awaited provision. When the trust has been recognized, who are the settlers, who are the beneficiaries, and how powers, authorities are allocated with a discretionary trust, within which the assets are handed over for the management. Either just the beneficiaries or settlers cannot influence the management of the assets and the allocation of dividends. It's considered that it is not controlled, as one should just comply with these provisions with regards to the settler and non-settler, beneficiary or the protector. As a protector, to speak about the beneficiaries, it's easy to restrict their powers that might be children, heirs. They do not take decisions as on paying revenues, by just they use the wealth. As for the settlers, it's more complicated, because settlers always want to exercise control. Most often, these are the heads of the family, who is their main settlers, who would like to exercise control to continue to make decisions. He should distance himself from that, to hand it over for management, or to manage, or to administer through the protector. As for the protector, this might be legal firm or advocates company, or company which provides services of an asset management company, and which undertakes the function of the controller. What is a positive thing about a trust? Provision of Article 170 provides that, as a result, the assets that is obtained through the liquidation of the company trust also is not subject to taxation if it has been transferred earlier to the settlers or to the relatives of the first and second generation. Very rarely they pay attention to that, but trusts were not popular in Ukraine in the past. Assets were handed over to trust when heirs come into their title, and they would like to hand over to their title this activity. Under the Ukrainian law, thus, this transaction is considered as a gift. Actually, a company or trust presents this as a gift. That this should be just subject to taxation. Therefore, many refuse to use trusts. Now, the provision states if the asset has been over to the trust by grandmothers, grandfathers, by uncle, aunts. Therefore, it is not subject to taxation. What companies are most convenient for trust? The US, Wyoming. In the neighboring room, they were just making the presentation. Cyprus. In Cyprus, there is a mechanism, international Cyprus Trust, which is exempt from taxation. Although under some conditions, you can get a certificate of tax residency. Switzerland, Liechtenstein were mentioned. And classical offshore jurisdictions. The only thing that with classical offshores I would be very cautious, because they can be easily recognized as tax residents of Ukraine. Our trust can operate through liquidation. You liquidate the company, announce that it is liquidating. You declare that it's your revenue, then you create a new company and thus invest this revenue into that. In future, your heirs might retain the title for these assets without tax effects. The only thing important is to comply, to distance yourself from the management and to find a solution which is adequate and sound. The next option, recognizing a company as a tax resident of Ukraine. That's paragraph 133.1.5 says that the taxpayers are residents, which are foreign companies that have their effective management in the territory of Ukraine. If you analyze offshore companies, these companies have their place of management in Ukraine. Here there is a clear list of criteria which are indicators of management in Ukraine. Criteria might not be just restricted and also by some indirect indicators. The tax authority can prove that the company is managed from Ukraine. What will be the facts? The company will be recognized as a tax resident of Ukraine, and the tax returns and tax should be paid in Ukraine under Ukrainian law. Some speakers might disagree that it's a dangerous thing, but I think it's quite an interesting option. Basically, I would agree with them that for some types of businesses, this option might be of interest because paragraph 134.1.1 the income is taxable if it is generated in Ukraine. A foreign-based company, if it receives the revenue from another country and doesn't have connection to Ukraine, will not be subject to taxation in Ukraine. That's the whole idea, but it should be registered with the taxation authority. Filing with the register, the company is not recognized as a CFC. There is another risk, the risk of the permanent trust agency. If it will be confirmed that there is indicators of the permanent agency, the revenue should be assigned to the Ukrainian residency or other residency. These are the offshore jurisdictions. They are in the area of risk. That's a classic offshore risk. They cannot get the certificates that they are taxpayers of their countries. The law clearly states that the companies are not a legal entity, which has been recognized as a tax resident of other country, cannot be recognized as a non-tax resident. For a company not to get into the risk that it should get a certificate of the tax residency in another country. But nevertheless, for some businesses, it can be a good solution of moving from the area of risk. The next aspect, organization. Organization, well, talking about organization will mean, first and foremost, migration of company from another country. Not all countries to the denomination. It's the change in the registration, the change in the country of registration of the company. With that, assets are preserved, Dutch rights, almost that's that the bank accounts are preserved. Classical offshore, mostly yes. Cyprus, Malta, yes. Emirates allow this to do. The UK, gone, not always, not all cases. But what are the advantages about that? In the tax code, it is specified that if a company has a turnover over 2 million euros a year, then that's for foreign countries has the turnover over 2 million dollars a year, then the revenue of such companies cannot be calculated with the adjusted. One of the criteria is the availability agreement on avoiding double taxation between the countries. If you're a commerce company in the jurisdiction from Belize, BVI, Panama, and you would like to keep it for operation because they have long-term convenient bank accounts, and it is chance to make redemilitarization into the jurisdiction with which Ukraine has an agreement on avoiding double taxation. Then, in case Sanders and turnover over will be known to calculate the adjusted revenue and to pay tax in Ukraine. And if there is no there is not provided, you can use it. You can use a transboundary merging. So, for example, in Estonia, a company established in Estonia, Luxembourg, then an application is submitted on merging companies. All assets are brought into a new establishment, and the old company is liquidated. That is, such transformation is carried out under EU consolidation manner. It is allowed. The fifth option, restructuring. There might be different options of restructuring, restructurization. Interesting cases were presented by Alexander Lindemann how funds are used. We would focus attention on Ukrainian national tools. For us, such an option, which we have chosen, it might be considered an option. One may not just move somewhere. It might be just restructured. If we look at large holding companies, the fifth president, our oligarchs, many of them use in their structure, and they use different funds. One of the advantages that their revenues on assets is exempt from taxation. Next speaker, Khrystyna Bilichak, will inform about this. The only thing I would like to explain about this restructuring. Foreign companies, they might hold shares of foreign-based companies. A controlling person will be who? The fund, a legal entity, a tax resident of Ukraine. Accordingly, all reports. Also, the adjusted revenue will be declared by the fund. The income of the fund from assets it holds is exempt from taxation in Ukraine. Accordingly, thus, we disclose this data to our state from some aspects. We display that indirectly, the Ukrainian resident holds these companies. Fund is protected because of the regulator. With that, it allows to keep the current structure without actually not changed, with small steps to keep the whole structure, then the favorable. One of the objectives, which also has been first during the registration of companies in Cyprus, this non-taxed sales of companies. The fund would allow doing that. Actually, I would say that this concept with the fund correlates with the concepts of the tax on the distributed tax. So the tax is paid once. The presentation will be accessible for you. If there are some questions, you are welcome to put them. To wrap up, we always regard, probably it's not correct, I'm an optimist on the whole, and I try to regard all issues from the point of opportunities. If there are some negative aspects, what CFC provides to us. For me, the CFC just gives me an opportunity to make a general cleaning, to make the auditing. The CFC law obliges to carry out financial reporting on all foreign-owned companies. Then to carry out restructuring, to clean out, to terminate non-primary assets, what is not just typical for us, to optimize costs, because some companies will be liquidated, so there will be no need to keep them. We very often face the situation when we start to work with the company with 24 of offshore companies, and we ask, what are their purposes, what are their functions, what do you pay for them? 2,000-3,000 each a year. If you calculate the entire amount, it's some saving to restructure debts. In the past, a practice was popular to invest in Ukraine through loans from Cyprus-based companies. And it turns out that these loans are hanging for many years. These companies are just alive, but these loans should be done. Loans might be restructured. Bonds might be issued. It might be converted into the stock. But these solutions that can be carried out through national tools to declare revenues. When our Ukrainian resident just applies to a foreign bank, he confronts the question: demonstrate your assets. Then just 2 apartments and 2 cars, and how to corroborate that the declaration that this is the asset is quite complicated, practically impossible to prove it to the foreign base. Declaring of the revenues without declaring of the revenues to live and to acquire something in Europe wouldn't be possible. An opportunity for investment. To declare in Europe, you need to confirm that you have these opportunities. That's also registering your heritage. And then that's when you have the third, second generation members, when the owners do not have proper documents on the basis of which he owns the owners, and then the company is stolen from them. Then for lawyers, it's not possible to roll back without some chain of documents. Just nominated owners as a threat. Moving to them, it's also an opportunity to be protected from raidership. It's all from my side. Thank you. If there are questions, You can put them during the coffee breaks. Now, not to delay the time schedule, I invite Mrs. Bilichak to represent the company PROFINVEST, which deals with structuring, establishing of investment fund and with their management. And now in detail about these tools which I mentioned, I'll inform in detail about this.
What I'd like to start with, we will be speaking about the Institute of Mutual Investments, how do they function on the investment market and what are their benefits. I start with the fact that any business would like to get the highest income and pay less taxes. This is a major motivation of offshores use in the business structure. What is the shape of business structure through the offshore companies? There's a company in Ukrainian territory and they move the incomes into offshores. Of course, the transfer of profits, they do it without paying profits, and of course, usually non-resident is a citizen of Ukraine. What do we have as a result? According to statistics, 83 out of 100 American companies, 99 out of 100 EU companies in the structure they use offshores. Ukraine is in the top 20 countries of moving assets to offshore. Of course, other countries didn't want to live with that, so they started aggressive attack on offshore companies. Peace plan, compliance procedure, introduction, controlled foreign cooperation. All of that, this is results of fighting against offshore companies. So, is there an alternative today? And we think that for Ukrainian business, the alternative is the institutions of mutual investments. The institutes of mutual or joint investments, they have tax exempt. They do not have to pay taxes. For instance, the joint investment, corporate investment institutions, when they pay dividends, they pay much less taxes. So if we sell real estate and we have royalty, we do not pay income tax, corporate tax. So if we're speaking about paying dividends from the institution of joint investments, we need to pay 9% of income tax and 1.5% as military fee. So only 10.5%. So when legal person first pays 18% of income tax, then 5% of personal income tax, and 1.5% as military fee. So 21.5%, 23.5, 4.5. So when we're speaking about institutions of mutual financial, they do not provide any services. They only involved in placement of funds into the institutes of mutual financing and getting income out of that. So what are the assets of such institutions? Movable and immovable property. Sweat entities means intangible things like inventions, etc. So the models of institutes of mutual investments is purchase and selling of assets, lease of the capital assets, royalties, etc. Let us tackle models one by one. The first model is to buy and sell capital assets. They have the right to buy and sell any type of real estate, movable, immovable property. To what is it today when the owner sells his business? He resettle or say re-register everything in offshores. So in our case, there's the same opportunities or same conditions. So in our market, the Institute of Mutual Investment, they invest in construction. In the beginning, the price is lower, and as soon as the building is nearly finished, this institution sells apartments, and the price is higher, and they have delta. This delta is generated in the institutions. Next model is to lease the capital assets. They have these rights, the institutions, and the incomes considered as the income of this institution of mutual funding investments. The institution of mutual investments, they do not have any preferences when they pay VAT. So working with this tool, you should remember that VAT will or must be paid. Next model is a lease over funds, ventures, corporate funds. They have the right to lend assets to the legal entities if their share in the equity is more than 10%. So legal entity could generate costs, and the institution of mutual fund investing, they have the income. In the past, the financial regulator, they were stick to the position that rendering services is a special type of lending, and since these institutions are not in the register of legal entities, so they do not have the right to do that. So the National Bank of Ukraine now is a regulator in Ukraine, is the regulator. As for the institution of mutual investment, regulator is the Ukrainian State Commission on Securities, and they say that venture funds, they have the right to lend money for certain interests. Next model is royalty. Today, the intellectual property becomes more and more popular. Know-how, models, inventions being registered with authors, with physical persons, or registered with legal persons, providing certain services. So this is probably not very beneficiary, because if you register the intellectual property with the Institute of Mutual Investments, then the institution of mutual investment could generate certain income, and the legal entity will pay certain costs for that, because the income related to royalty is the mutual income. In 2018, the tax inspection tried to break down this mechanism. What did they do? The legal entities that paid 14 million royalty, they moved this amount from their losses, and since they exempt from taxation, you should not decrease this amount from. So the Constitutional Court said that the income from of the institutions of mutual investments could be considered as the losses of a legal entity that pays taxes. Next model is bank loan repurchasing. IMI, they have the right to buy such banking credits, and the costs gained as a interest for such credit or loan is the income of the institution. What are the benefits? The IFI gives opportunity to invest easily in a new business and refund. The only losses you have, costs, is how do this work? The Institute of Mutual Investment, they have royalty and they give it out to some other legal entity. If this type of cost movement, this is one of the benefits of the Institute of Mutual Funding. As well, you should remember that, of course, sooner or later will be a moment when you should quit your business and give it out to your heirs. If you restructure business through offshore companies, first of all, you need to at least your heirs should find your assets, then get it registered with themselves. So if you do this through the institutions of mutual investments, then they only go through the shares mechanism, and it will be more transparent, more simple, etc. Some regulatory aspects of the Institute of Mutual Investments. The institutions started to appear in Ukraine in 2001 when the law of Ukraine was adopted on the Institutes of Mutual Investments. We had 605 KIFs in Ukraine and 840 leaves. So now the most popular are corporate investment foundation. This is a simple legal entity as a corporate society. So the minimum statutory capital is 1,215 minimum salary, 6 million hryvnia roughly. So you may register any type of any amount over this figure, but do remember, if it will be higher than 130 million hryvnia, then we should come to a commission, have submit the documents. I need to stress that this provision is not included in legislation, but the Commission on Securities, they have their own practical approach. The specifics of CIF, they are not able to manage their assets themselves, so they have asset managed company, and this asset managed company responsible for accounting, for reporting, for so everything that is related to the CIF The activity of such company is in the auspice of the asset management company. So, asset management company, or AMC for CIF, this is kind of a director or CEO for limited company. The activity of AMC company is regulated strictly. For instance, the minimum they should have 7 million hryvnia as the statutory capital, so they should have to work with the companies. Again, they should have 3 at least certified experts. So not everybody has the right to manage assets, so this legal entity could not give out proxies, and all the activity of this type of SIF company is controlled over the asset management company, so they should sign the agreement for asset management. What type of limitations could be there? For instance, right of signature, they should have only 2 signatures, the director of the asset management company and supervisory board chairman, for instance. So briefly, this is about the Institute of Mutual Investments or Funding activity today. So Darwin once said that it's not the strongest who survives, but the entity that could adapt to environment best way. So this CIF is a tool that gives you opportunity to work transparently. Thank you. Thank you, Khrystyna. Short question. The mutual investment funds, do they have right to buy shares or property or something abroad? Yes, of course. Speaking of shares, yes. We need to understand that we buy shares, then they should be deposited with a depository institution. So not in every country you have technically an opportunity. I add from myself that today, when physical person could invest from Ukraine is 100,000 euro per year, legal entity up to 2 million euro per year. This is according to Ukrainian law. So if 2 million euro every year means if you have more than 2 million, you should do it through the Institute of Mutual Investments. We're speaking about the maximum amount. Minimum is not limited. Minimum amount is not limited. Bank, there's hard currency, control over hard currency movements. So if you work through such institutions, they have less questions, means as a fiscal monitoring. No microphone, no sound. No license required. Oh, unfortunately, we could not translate if we do not hear people without microphones. There are limitations of hard currency legislation. We're speaking about non-co-working countries or non-cooperating countries. Yes, you're right, but this limitation is only cover the countries that are in the FATF list.
It's a different issue. I fully agree with you, because when we want to invest abroad, we come to a Ukrainian bank and just inform about, and very often we try to prove to the bank that they were fit for that. It relates to many aspects. Here I agree with you that we inform banks what is opportunate and what is not opportunate. Very often that because that they do not know, they very often do not allow it. So there is no input into the microphone. Well, you see, actually you can buy any corporate titles. Do you understand it? I understand it. As for the amount of the foreign investments, it's $2 million. No, it's like in Ukraine. That's the nominal value is 10 million. With the operation with CFC, I would add that to the presentation. While working with the CFC, there are some rules which should be complied with. One of these rules is the acquisition of assets should be carried out just based on an independent evaluation. That's 2 million euros is a restriction imposed by the law, not more than 2 million euros a year, but your acquisition should be should be evaluated independently. You see, the tax authority will ask whether it is sound, whether it is not fictitious, but there is no direct requirement in the law to evaluate it, to appraise it. No, there is no such requirement in the law. However, for the transaction to be acknowledged, correct, that, but for the institute of the mutual method, there are following restrictions. You cannot involve any evaluators that are only involved into the prospect. If you want to attract others, you should make the just in the changes in the prospect of investments. You see, they should be contributed just obligatorily in money. They can be substituted with other assets, but these assets value should be of real. Just very often they think that we would buy an apartment, and then we will evaluate it. That the price will be 7 million euros, and then we'll comply with. Then the final question. Okay, then, thank you. we smoothly move to another our speaker, as the question whether the under CIF one may invest to foreign-based companies, how to own with their real estate. Ladislav Nemirovsky will inform about. He was very actively putting questions to us. Thank you. Now he'll share his experience how can one earn money, not only again. What is the level of yield in Ukraine in real estate? 10% a year. Vladislav, what about? Is it at the level of European thresholds now? Well, no. Good afternoon. First, I would like to thank two previous speakers for a very interesting topic, and which is not very easy to present. As we understood how to pay less or not to pay taxes. Let's move to the topic how to earn more. First, I would like to inform about company, and then I'll start the presentation. Fortune Capital has been established in 2010. I was in charge of Oranta insurance company. After the crisis in Gulf Ukraine, we have started this company, and presently in Ukraine, I monitored the. It's probably the only company which has a comprehensive approach in managing private but not corporate finance. We consider that behind all corporate assets are private assets. Very often they do not have proper distributing division between private and corporate. When we were creating Fortune Capital, first it was capital insurance, because we have moved from the insurance business, and then we also included the real estate, taxes, medical tourism, and we have established our corporate institute. We have the online education for financial counselors and for investors. Who are our partners? We work with private banking, investment companies, with real estate agencies, with legal firms, independent financial counsels, and family office. If there are such among the attendants, we would be pleased to cooperate. Another Western insurance companies, our partners, legal companies, and the medical services providers. Now let's move to the presentation itself, and I will talk why in Ukraine 10% or non 10%, and compare it with the European situation, although we also invest in the US. It is considered that the yield is about 3-4%. For ordinary, for lay people, it's quite acceptable. That there is a deposit interest rate is of negative value. Therefore, it's more or less profitable, this indicator. But we'll talk about more professional tools, and we consider that today in Europe one can earn from 10 to 25% of yearly yield in euro and pounds. It will be a pleasure for me to answer your questions. We have singled out 4 primary strategies. That's passive revenue or rent. It is used everywhere as well as in Ukraine. The second is the incremental capital, the grow capital, and the developers loans to developers, and the fourth less used in Ukraine, less applied in Ukraine, and in these countries, investments into rates or other funds related with the real estate. The first passive income. The passive income we use mostly. Us as the company, we use it in the UK. We have come to it just about in 2013. We have seen an interesting thing, that in difference from Germany, Spain, Italy, and other countries in Europe, the yields on commercial assets is from 7 to 10% a year. Why it was at that level? Because in difference from the European regulators, from European banks, The British banks followed a more conservative scenario and stopped to disseminate free money. They don't have the money, banks don't have and then there is still a shortage of real estate. For developers to attract money, it's easier to sell a compound with some discount and give a good guaranteed yield to the end users. Largest developer cannot get to finance more than 50-60% they need. Regulators clearly trace the risk. Where to we invest with such small apartments? In our portfolio, we have both small investors from 50-60,000 pounds will move to larger amounts. Actually, we can satisfy any investor. Small apartments in Scotland, small apartments in northern parts of the UK give about a 10% per capita yield. That's it's real examples because the price of the apartment is 49,000 pounds. Revenue from the lease 420 months. The management year 12.5. So each quarter, our investors receive their in revenues. As a matter of fact, we have customers that hold such 4 or 5 apartments. The shortage of accommodation is huge in the UK, so very often local council pay for that. What if it is if a local councillors? Yes, there are some standards of accommodation for which this electric gas certificates and the apartment should be repaired. Otherwise, councillors would not pay for it. If council locals have paid, then you have buy the apartments under this standard, and this will be then leased. Then will be moved to more professional players where the contracts of 3PLA. 3PLA when owners do not pay for anything, when lease just tenants pay. A company typically they buy it, they make the porcelain per rooms and then continue managing such compounds. The company guarantees during COVID they had even they offer 10% of yearly payment. They buy out just apartments of elder people not far from the cities. The average apartment costs 79,000 pounds, and each quarter our investors receive in dividends. That's first years is the tax, and then they pay their taxes in their countries. Some pay, some do not pay. Legal house will tell you how to do it properly. All real estate is freehold or leasehold. Our customers, investors, are full holders of the assets. It's not tax in general, that's their asset. There are many arguments about the students' hostels. Arguments have started when COVID has started. People have started to say that we would move to online learning. I consider that it will not happen because in the UK, education means socialization. Even if it happens, when they move to online, when we talk about the new student hostels, it's actually a standard of 3, 4, 5 standard hotels. They can be easily transformed into the housing for young professionals. These compounds that will be finished by 2025, and a very easy transaction. Rooms cost from 700 to, and it includes everything, furniture. It's also the ownership. It's a property. Everything is simple here. We can talk also about the premium class apartments. If you compare with Germany and Spain, we do not like just housing in resort cities, and we also look at the busy cities, because one of the problems of post-Soviet investors from Russia and Ukraine, they try to invest in such towns, London, Paris, Geneva. These are good cities to preserve the capital, but not good cities for, but it doesn't mean Manchester, Birmingham, Liverpool, which allow for ordinary real estate new that you acquire from the development of 7-9% of yearly income. It's one of the examples. Matter of 7% is provided by the developers, but the housing in the UK is leased fully. There is a major shortage. Manchester is a second London. By 2032, there will be a fast train from downtown London to downtown Manchester, where we'll be traveling in an hour. BBC moved the Price Waterhouse moved to the Manchester because real estate cheaper, stuff cheaper, and the distance from London is not too great. Now let's talk about the second strategy. The first strategy seems to us is more fitting to small investors who would like to try to invest abroad, how to work, how to operate with other currencies. To talk about pounds are very good among currency. All problems with Brexit have ended, and then the UK, England can go only upwards. We talk about the capital growth, about the yields from 15-20%, but here we invested in the development or the development together with the developers. I will give you to provide some examples to you, and you'll understand what particularly we do. In this situation, this project in the center of Europe, half an hour ride from Brussels, building construction of the cottage settlement. We'll talk about the indicators. The size 40,000, the scale 24, 150 cottages, 30 apartments in 5 buildings. All permits have been obtained. The construction is in process. We've been constructing the developer is the largest company. Cartel. It's a company which has been listed on the exchange. And the question is, one expensive investment money, if there are bank money, is available in any project. The 30% should be equity. In this project, 30 houses should be built by the developers themselves, and then the bank moves in. What investors? Where the 250 million, we have only 1 million euro left. Investors come into the project. In this situation, we made an investment from starting from 100,000 euros. In 24 months, receives his or her 100,000 euros in does itself, but also gets 2.5% of the actions, and also lent on collateral. That we protected it. Investors received the land at the price of 150. After they received their money back, the land burden has been removed. Shares are paid on the entire project is sold out. the investors will participate in the cheap capital from the bank, and the calculated profit for 3-8%, it's the size of 80%. We say from 18-20% interest rate a year. We provide an opportunity for investments to participate in the developer's profit.
Here I'll give you another project. This is a renovation project. This is COVID type offers, crisis offers, purchase of 37 apartments at the the seashore of Kos Island. ROI 50% annually. It's not a mistake. I will tell you how it goes on. First stage, 37 apartments, 800,000 euro, including all inclusive, means due diligence, SWOT analysis, lawyers. Next, around 1 million euro, 900,000, but overheads as well, is a total renovation of this site. As well, you probably already recognized here, there's a grant here. Cheap money, grant from EU, this is a gift. They gave Greek economy in order to recover tourism sector, touristic sector. There's a special commission. This grant has already been accessed. So probably 800,000, probably 400,000. So what's the strategy? Work with this strategy. We complete the total renovation. The managing company starts to lease apartments. At the same time, they are being being sold to physical persons. 1,030,000. It calls for 2 million expenses and 1 million net profit of this project. Divided to half, it's 1/2 of this is for the investor, 2-3 years. This is a payback period. That means 50% annual royalty. Coming back to Belgium, there are investors that would like to be investors, and other investors, they'd like to understand what specific amount they will have and in what time. So here we have pledge 100,000, it's or 500,000 is if it is 1 million. So this collateral works with the loan for 24 months at 6.5% every half year. It's even higher than 11 and 13%. As well, in our contract we stipulate late payment, means if developer he fails to pay back in 11 months, then 15% annual rate is to be paid, annual interest rate. The same project is bridge mezzanine. This is existing project. All of this project has already been sold. There's 56 apartments. They are sold out to small investors, and the bank told to those small investors that second half of payment I will give you when the object is renovated. So in Austria, for instance, they take a mortgage, half of money they paid, and half of that amount they should pay as well. Means this is a bridge. Means the investor either has 12% interest rate annually, or with additional investments up to 20% interest rate. So we give them 2.4 million, and after renovation will be 4.6. It means bridge mezzanine. So then definition of that. Fourth strategy is very simple. Plus of this strategy is liquidity, because we invest through professional funds. Second plus is we invest with the professional companies. The alternative is the definition, because they are very poorly correlated with security market, with fund market. First foundation, the Montreux Healthcare Fund. And this is top 5 best hedge funds in Europe. This is Great Britain fund, in spite of Montreux as a name. So initial investment is 10,000. This investment could go through insurance envelope or through online investment mechanisms, sites. In fact, for the professional investor, the investment is 25,000 euro. What this foundation is involved in? They are involved in very interesting things. They buy elderly people houses. If you know the Boris Johnson, he spent some days in small private clinic for 7 beds only. So they buy smaller objects funded by governmental companies, and usually with long-term lease agreements. Montreux 16% interest rate annually. This is average profitability of this object. You may see the quotations in Morningstar. So this is one of the best investors of the Church of England. So if anybody would like to have a passive income, the fund is ready to pay 8% annually. So you just place your order, in 60 days you will have 8%. All the rest of the money travels to the capital. And this is similar. Difference from Montreux, that Montreux already purchased headhunters, etc. So All Seasons works with real estate only. 13.3 million people having problems in Great Britain: autists, alcoholics, disabled people. So 3,000 pounds per week is the price for keeping those people there. So it is only 1,300 pounds for governmental institutions. So the government pays all the expenses and pays rental. What this fund is doing, they buy those houses, 8 to 10% interest rate. It is nominated in 4 currencies, including Israeli shekel. So you may spend your crisis time in that type of funds. If any questions, I'd be happy to answer. Thank you. We do have certain questions from the floor. Fortunately, interpreter doesn't hear the question. No mic, no interpreting. First of all, in profitability, even in growth strategy, it's after corporate tax. Your costs, you remember, the figure is after paying all the taxes in Greece. So if you paid already 18% out of your 600,000, instead of 15% per year, you will have 40%. But if you do your kick exercise, or if you establish or set up CIF, then now the question is type of investor. If this is a big investor, he could set up CIF, then go through a loan, keep the shares, and pay less taxes. Funds, usually we go through tax envelopes, so you don't pay anything out of that. Okay, yeah, probably could go through lease. Look here, an investor who purchased elderly house, they get 10% in Great Britain. They are absolutely clean. Only £200 per year to his accountant for declaration submittance. If, for instance, he is a Ukrainian person, 18% of personal income tax he pays. Yes, if he has income from abroad, it's 18% plus 1.5% as a military tax. Independently, if he is a sole proprietor. Sole proprietor depends if he invests from his sole proprietor account. Not a difference. Okay, sole proprietor has operational income. But if he says, for instance, in Russia you may do it through a pay and pay 6% of the tax. The idea is interesting. We need to let us take 10% and pay 20% tax, 8% of clean money in pound. Is it good or bad? The income from abroad is taxable full amount, but national amount it's say income minus expenses. For instance, I invest 100,000. I gain certain profit, 10,000 for instance. What will be the taxable basis in Ukraine? Let us consider you have taxable 10,000. You pay 2,000 pounds. 8% interest rate annually. Good it or bad it? You tell me. Speaking about taxes. You don't want to pay taxes? No, I'm just giving you info how to earn 15%, but you say how to pay taxes. Yeah, we may discuss this as well. Certain people that do not pay. If somebody has second citizenship, Israel for instance, and he didn't spend 10 years there, then he won't pay taxes. Not everybody has a granny in Israel. Let us start with profits and then only come to taxes. were a chance to buy the entire island for €1, but you need to invest 5-6 million euro after that. No, we are not involved in that. We work in proper segments, we do business. Question from our online listeners. Do you need to confirm the source of income? Yeah, in Great Britain, all the transactions are going between two lawyers. You do not immediately do the transaction. You transfer your money to your lawyer. He, according to the law, should go through the procedure of anti-money laundering, and he should answer the question on source of income. But we didn't have a single case when transaction was stopped or, let's say, cancelled. We work through a Swiss notary. Okay, you may ask your questions personally because we have now our lunch time. Yeah, bon appetit.
Dear friends, let's continue. Our after-lunch session will be opened by Andrei Leon. Andrei is a lawyer with over 15 years of experience of working in lawyers' firms and the auditors companies. What about the tax amnesty? What will be what lawmakers offer to us? How can we use it? I welcome you. It's my pleasure to welcome you all here. I hope that after lunch you won't fall asleep, because the presentations will be very interesting. So let's make it in a very interactive way. So if you have some questions, please raise your hands. Just the topic I've chosen. Why? We hear this, the tax amnesty. We hear about it from the moment of revolution. First, there was the tax compromise, when the trade-off, when the taxpayers debts were covered, and now in the election programs of the candidates in the political parties, that this tax amnesty would allow us to return the capital for the development. Do you have any understanding how much money is staying abroad, was exported from Ukraine? Can you? $120 billion, which are outside Ukraine, tended, and which the government hopes at least some part of it to return to relaunch the economy. Still, despite that, tax amnesty was planned to be conducted. Every year we sign a memorandum of cooperation with the IMF. Ukraine undertook liabilities not to introduce the tax amnesty. In the most recent document, Ukraine also obliged for the next year and a half not to introduce tax burdens, but informed the IMF mission that that's a scheme to develop, because I was taught that to have a scheme developed on voluntary declaration that would take into account the following aspects. First, it will match the best world practice. It will be fair to just taxpayers. It will comply with the requirements of the laws on fighting money laundering. It will comply with anti-corruption laws. It is clear, provided it will be explained not to politicians, and there will be no exemption from non-tax related infringements. That there will be just clear control established, and it will match with BEPS. From that document, it's just one paragraph from that memo. We may understand what liabilities undertook Ukraine and what we are to expect. However, when we analyze the experience of foreign successful tax amnesties, we would see that not all function. These are examples of successful tax amnesties. One of them was conducted in Argentina in 2017, when over $116 billion were declared, and when the taxes were paid in the amount 9.65 billion. The successfulness of this amnesty was that the information was simple, procedure was simple, an opportunity was provided to pay taxes on a reduced rate if the money was returned to the country, or the money was invested into this governmental bonds, as well as the guarantees were provided to relieve from their responsibility. Italy also conducted a successful amnesty. This for $1.4 billion. They returned over 61 billion euros into Italy. Ireland, by the way, the only amnesty where there was the tax rate was not reduced. So, but we won't apply any sanctions if you disclose. So they've got 2.5% of the GDP. From that, we may draw the conclusion the tax amnesty can be considered successful when 2.5% of the GDP has returned. So the planned GDP is 115 billion. For this amnesty to be successful, we need to obtain about $3 billion. Unsuccessful amnesties. Georgia. It's almost a funny situation. Eight persons disclosed. They declared 35 owned, following the Ukrainian scale. That's quite a big amount of money. Why? Because the awareness raise campaign was conducted not well. The UK, they supplemented the budget just by a smaller amount than they expected. So the opportunity to use the amnesty. Taxpayers didn't opt to disclose before waiting some answers from the government whether this amnesty can be applied to them. What is happening in our country? We can sum up the success formula among the aspects: safeguards of not being punished, increased tax rates, although as we've seen, not always tax tariffs decrease. Tax amnesty was carried out in India, where should have been, but if penalties were smaller, it failed. The absence of additional inspections and enhancement of the responsibility after amnesty on non-legal aspects, that's the trust. Brought awareness raise campaigns explaining that they were just prolonged. We observe it in Italy, in Russia, in India conducted several amnesties. In Ireland, amnesty was carried out, but in turn already just after 10 years. Introduction of alternative options in addition to paying tax, if investment into sovereign bonds, or you will return money to some accounts where they will stay and disclose. At the moment, at the Parliament, there are 3 bills which provide for the tax amnesty. We'll be talking about 2 of these bills, and I'll briefly mention about the 3rd one, as there is no global discussion of it, but can influence the tax amnesty. We have bills 1232 and 1232-1. The first bill was submitted Mr. MP Gitmantsov, and the second one was 1232-1 was submitted by Mrs. Yujanina. What they provide? 1232 provided that individuals, including self-employed and non-residents, might declare. If they wanted to declare this money, then so they pay money, and they should not pay any tax on them, as it is known the money on the in the account costs more than the money in the suit. So it doesn't extend to tax agents. Accordingly, when an individual Ukrainian citizen was paid just in envelopes, then the taxman could go to the employers to investigate where it came from. So that can be then investigated when one can apply to money, to real estate, assets that are not directly owned by you, but as for which the beneficiaries could manage them. For example, if there is a foreign company, an individual might decide whether it is a real estate, to sell a yacht, or to use it as collateral. So it is not allowed that to declare assets that have been earned as a result of criminal activities, except for taxes, as well as those individuals that occupied positions. As for the rates, 5% is contemplated for the assets. For money, either 5% if we return them to Ukraine and keep them on accounts, or we invest it into the state bonds, or if 10% we keep it abroad. If we invest them into the sovereign bonds, then 2.5%. There will be another bill which would revise these rates, as Ukraine undertook to make the terms of tax amnesty for all taxpayers. There are rumors that there will be a bill contemplating a rate of 18% of taxation. That means that the successful reform might be poor. So as for the procedure, it's quite clear. So you submit a tax returns, and then the tax authority can check it. Our tax obligations will be considered accepted if within next 180 days the tax authority didn't conduct an inspection. So then if they carried out the inspection and stated that something is mismatching, then there might be a fine imposed upon. As I see it, it is also a factor that can contradict this procedure. Those who didn't declare, they consider, so they have the undeclared asset in the amount of 300,000 hryvnias. Whether it is too much, it is not discussable now. Those who declare may not inform what are the sources of their income. So no fines or penalties are imposed. So no more criminal responsibility is contemplated for that. For non-paying taxes, for avoiding pain, for paying social contribution, and also because of some administrative arrangements. Documents received from the presidents cannot be considered as evidences in other cases. So if we disclose, and it cannot be used self in case if tax authority would try to accrue more, as tax amnesty is not extended to assets with respect to which unreliable information is provided. And reliable information, this notion is quite extendable. For example, an asset costs 1 million, but no, it costs 500,000, and thus the assets can be excluded from the tax returns by some formal criteria. Bill 1232(1). What is the difference from the previous note? The rates are different. 9% when we place the money in the deposits, there will be 9% and 5%. Out of the good things about that, it doesn't provide for the need of inspections. The good rule: those who didn't tax returns, they would be considered that they declared assets in the amount of 1 million hryvnias. One of the most. So nowhere it is specified that you should pay taxes. But if you submit tax returns, that it is assumed that you should pay taxes. So, and you do not pay anymore. I hope that's an absence of some normative techniques. So if you declare that you have 1 million, then you wouldn't pay anything. As for the guarantees, they are similar to the previous bill. This guarantee the ban for conducting examinations, that no tax inspections can be carried out because the returns were submitted. This bill provides for the release from the violation, from the responsibility for violating rules here. Well, when the anti-monopoly law is infringed, so this responsibility is not to be applied against the tax resident. For example, something without the construction of a house without proper permits. There are considerable penalties to be imposed. If the house is declared, the taxes paid, the fines are not applicable. This is a compatible table. If it is of interest to someone, you may find it in the compilation of presentations. So there is no inspection under the second bill. Risk and opportunity, as there is no inspection. And the Ukrainian bill, you can declare assets that you do not have. That's for future purposes. A wider waiver from the responsibilities on the Ukrainian bill. And on the Ukrainian bill, the expenditures are to be carried out. There is sellers who seller the commodities to be subject of fine in the amount of 100,000, specifying to whom they sold. If you spent more than you have money, it will be a query sent to you. You should explain. If you are not able to explain, the taxman then will count the tax responsibility to you. The demands of the bill does not provide for the further increase in the responsibility. Why I spoke so specifically about guarantees of the state when the amnesty is implemented. A recent practice of the case Vyatsky Kvass, when the taxpayer disclosed, liquidated a foreign company, took money for himself, and said you are subject to a tax but it is a criminal case, financial control, then you didn't comply with the law. You need to analyze that potential disclosures can be amnested. Here we have quite a extendable article, Article 209, so that legalization of proceeds obtained in a criminal way.
So I expect for myself that many assets that will be disclosed within the tax amnesty, assets before 2015. This is that risk, and if Ukraine strictly stipulate that we will dismiss liability for any types of assets, then we will be in a black list immediately. Once again, the comparative table is exempt of what? So turn your attention on the fact that in spite of loan list, you don't have Article 209 here, and it couldn't be here in principle per se, and you should analyze first of all if there is a presence of any corpus delicti of 2005. Draft law by Yuzanin removes liability from you according to the tax code, but maybe certain declarants that imported, for instance, TV sets or certain pieces of equipment, they could not be convicted. So Hitmantseva draft covers personal income tax for physical persons, military levy, social fee, and tax payments. So what should we expect? That everybody who will disclose, they will be visited and asked why you didn't pay the military levy. So maybe expected these 1.5% as well. A piece of interesting information either. Many of you know that we have a law 466 aimed at anti-money laundering and stipulating the tax basis. There's a very interesting provision there that if the controlled entity will leave the company, everything will be tax-free. So there are certain additional rules for tax exempt for any assets that are. So you may even today purchase controlled foreign company with assets, and you liquidate it, etc. So what's the difference between this liquidation and tax amnesty? Tax amnesty, of course, will remove criminal liability from you, but and of course certain guarantees will be issued. For instance, there will be no administrative or economic liability, and some other types of liabilities will be lifted. But when we are speaking about foreign company, we won't have these guarantees. A typical case or typical example is, for instance, here there's a bag of money and the money appears in the bank account of foreign company. So here is very clear evading of taxes, and of course it is very clear. So not only I avoided tax payment, but as well I organized transfer of those money to account of foreign company, and of course it's kind of a money laundering exercise. In that case, you won't have this tax exempt and any relief, and if you, for instance, disclose your controlled foreign corporation, then it won't be an offense according to Article 39, Item 2. So, exercising tax liquidation of CFC, you may just pay certain small amount of tax and then go into tax liquidation. So we may declare property that is not in our ownership today, but we could manage this property. So this Getmanseva draft law provides for everything except for what do we do when all the assets will be in our ownership. For instance, a certain company in Kodazu, for instance, but what do I do next when I buy this property? I've already declared this, but in Yužanina draft law it is provided that as soon as I declared such assets, then if I take them into my account, then I won't pay this. So of course it could be a contract of asset management. You may declare the trust property, then take this out of the trust with paying of smaller taxes. Summing up, since the draft laws existing now are not very fair towards normal taxpayers, the probability that will approve them is not high. And since the trust of Ukrainian taxpayers, the level of trust is not that high to Ukrainian governmental circles, the guarantees of relieving from criminal prosecution is a big question. So what do we do for amnesty to be successful? First of all, clearly state that liability is lifted not only from declarant but from legal entities as well, without any audits, etc. So if you do certain tax audits, then you should not have any additional taxes because of certain circumstances. So they only could run audits based on information the declarant gave. So I believe that in that case, if there will not be such a provision, then it is dangerous to disclose. Again, we need to have a very wide awareness company. Next idea is unreal, but a matter of discussion. I would have introduce a mechanism that fiscal agencies should give out a guarantee that in case of disclosure of certain things, the declarant will not be punished according to the criminal code. So again, there's another opportunity of anonymous deal with the tax agencies. For instance, certain representatives comes to tax authority, says that if I declare this and that, this type of assets, I will have a right to declare, to pay tax, plus must be certain personal certificate, governmental certificates, confirming that this man or this entity has declared this. So we need to introduce something like that in order to remove strain and remove anxiety of people who are ready to declare. So this is it. It's all from me. Any questions? Ready to answer. Thank you, Andrei. Very interesting. Very sensible. Wait for the mic. I have a question. Галина Стрижанка, своя справа, Житомир. Based on your experience, you come to a conclusion that your experience is very vast and you have a lot of consultations, you have your own opinion. Have you ever thinking over about the initiatives to be suggested to lawmakers to tell them that the situation is as follows? We should do this and that, otherwise we won't have a success, because we are in one and the same deep manure. So we need to work towards strong and sound Ukraine, and to have 100% success of working with our taxpayers, because it is prosperity of our children and grandchildren. Thank you. I am very proactive in comments over certain draft laws, and these my comments are being submitted to the standing committee of Ukrainian Parliament. As well, my comments are submitted to the Lawyers Association of Ukraine. That's why all that ideas are being discussed, and now we're expecting the, merged draft law. And as I mentioned already, we are speaking about 18% of tax rate, and from my side, I do all my best in order to have this tax amnesty successful. Do you understand the deadline for this draft law publishing? Don't think that it will happen before 2021. Probably by the end of the year we'll have this new draft law, because Ukraine already mentioned that until end September 2020 we do not plan to agree this scheme with IMF. So in fact, or realistically, it will be 2022. So before that time, we do not have any option to declare properly, because May is the deadline for our income declaration. Again, CFC will only take force too, so it's very ill logic in all that, but I believe that maybe this will be launched in 2021. Do we have potential chance of having a zero rate tax rate. I won't be surprised in this country by anything. Maybe towards, say, clean taxpayers. Thank you. Vladimir Harkusha, Gazprom. Question is, speaking of amnesty, Getmantsev involves didn't know the evaluation or assessment of assets and property will be assessed. For instance, Spanish building or Spanish house in Spain, how to do this. Speaking of money, there's no clear definition. Are we speaking about Ukrainian banks or just the bank's report? Speaking of money, we, for instance, decided to declare this or that, but tax people, they will have a right to approach banks with a request for this and that information. Of course, foreign banks are not trustworthy towards Ukrainian, means they do not trust Ukrainian tax authorities. Speaking about lower tax rate, to my knowledge, there's nothing like this requirement. You are speaking about liquidation of company procedure. You mean liquidational balance should be, or balance after liquidation should be returned to Ukraine. To my knowledge, there is nothing like that requirements, because we are speaking as well of real estate or immovable property. Once again, speaking about the tax liquidation, I didn't find something like that. In amnesty for a lower rate, there should be a Ukrainian bank to them. It's not mandatory, but if we'd like to pay less taxes, then we do it. I believe that the tax amnesty will be dealing with the personal incomes, not something that is related to CFC. Okay, we'll leave and watch. It's not contact point between this and that. If this tax amnesty will go in parallel with the opportunity of CFC tax liquidation, then it could be another scheme, the most balanced way. Means any physical person having income, it is already declared, but if no, I declare my CFC income. I do not declare it in order to have state guarantees, governmental guarantees, that I won't have any liability. But if I'm speaking about Yuzhanina project, there's not such provisions there. Probably last question and we'll go ahead. Thank you. And Nadi, Kiev. What do you think? Will the final edition of this law contain crypto assets and loans between physical persons? Will you recommend your clients to go through a tax amnesty, or you will advise them to stay aside of that? Speaking of Yuzhanina law, draft law, there's nothing like a list of assets there. Second question was about right of settling between physical persons. It is already clearly stated in Getmansova draft law that if you don't give the same price that we already purchased certain assets from them, then the say value, it will be valued at nominal value. So we would like to declare, and we don't have the documents say supporting the figures that you had in the moment of purchase, then you couldn't do that. So if they owe us 1 million and we couldn't say confirm that, then we'll pay taxes out of that 1 million. You are speaking proxy of the rights of demand. No, we didn't took those money. We didn't borrow them. We somehow evaded something. So you should declare everything.
And as for the third question, whether would you recommend, frankly speaking, that with that layout, I wouldn't advise to disclose assets that were acquired earlier than 2005, because it will be like a Damocles sword hanging over the head. It's a rare case than in our realities when customers have quite just white, clean business and IT specialists earning money abroad. There is commerce in progress not related to Ukraine. Then without Article 259 is not to my liking. So we'll continue. Then in our agenda we have the panel discussion about changes in the tax legislation. Participants are Dmitry Mikhalenko, Tatiana Kuzmich, and elected league I invite joined the panel. A couple of words about our Oleg Gavlyuk, senior partner, managing partner of Law and Company Strong, specializing in tax structuring and suggests for fintech, blockchain, gambling, and commerce industry. Is it right? Excellent. Tatiana Kuzmich, senior partner of the consultant in CAS Group. CAS Group, one may say, a dinosaur in the industry, so established in 1997, as it seems to me. 1997, that the company has over 20 years of experience. Kyiv Auditor Service, uniting consultants, auditors, and international experts. Dmitry Mikhalenko. Well, there is no need to press stop to introduce him. Dmitry participates actively in developing amendments to the tax code, actively supports the position, the standpoint of the business community, and when possible, if possible, tries to protect, defend it before the government. Managing partner, Crow Mikhalenko, since 2018. Crow Group unites about 250 independent companies with offices in countries and is focused on the services of consulting and tax planning. There is a list of issues to be covered by you when we are discussing. So, about what we'll be talking about. World trends in business and how they influence the Ukrainian entrepreneurs. Oleg, it's good topic. Good topic. Oleg Derenyuk is my name. I represent Company Strong, managing partner. Thank you that you attended. Thank you for this opportunity to speak in front of you. I would like to also to have time for communication. I don't know what I will have for the. So there will be questions to all of three of us. So I present, and then questions will be put to me. Let's start in that way. If there are strong questions, I will allow me to answer one question. Well, I may speak without presentation as well. We'll be talking about trends. Trends in the tax legislation, how it affects the business. Ukraine is part of the big process which is running in the world, in the economics, and we're part of the international economy. The economy is rather globalized. What is happening somewhere outside Ukraine also influences Ukraine strongly. And I think one should start, what is a trend? A concept of a trend, just a small explanation. It seems to me a trend is kind of something available, something existing. So I'll tell you something, you'll believe me. If I'll explain to you something you won't understand me, then it's not a trend, it's a hypothesis or something unclear. Now I may single out two main trends relating to the sphere of the tax interests of the government under tax law. The first trend, gradual interpenetration of tax, banking, and anti-corruption law. This legislation, these three branches of law start to integrate. The Common Institute, peer, control institutes, general requirements, anti-corruption law will see the substance. In the banking law will see substance. We see that channels of data sharing, automatic tax data sharing, they are compliant with the CFC requirements. We have the banking law and the tax law already. The question about the merging of three branches of law into one. Bank financial, I talked there. What is named now compliance? That's called ML compliance, as they name it briefly, no matter how they name it. And second trend. If the first, second trend is a trend, the positive, in what direction we develop, and the second trend, negative trend, that what is happening where we are slowing down. Well, I'm afraid that the tax law has confronted the wall. This wall is named digital economy, and the current tax law are not able to master this digital economy. From the very start, the control institutes inherent to it were devised in terms of non-globalized economy, when the business was present really. The business meant where it is on the ground. That's the income tax, they just administered well. When services started to dominate, VAT started to dominate. Now, in the economy is dominated by innovations. We cannot single out just in the IT industry, where is the commodity, what is the service. Some devices, they provide access to cable TV and so on. Presently, not to confuse you too strongly. So, these are institutes of control were tuned to the physical presence. A taxman will come and will see that you have the machine tools, workers at a conveyor, and the company is not registered. Then the taxman, if we talk about e-commerce, about a company which courses, bioactive additives, so they will and just will obtain a MasterCard account and will start promoting services across the Europe without being registered as a VAT taxpayer. In Russia, one can do that. And economically, we have a shell company in Gankon sending commodities to the. Should the VAT be paid in the EU? Yes, but they do not pay. There's tools of exchange of data which would allow to detect such companies. The same about the income tax. Then there is another question. If we identify, if we apply just extremely non-efficient traditional applicable, I describe. Okay, take CPC. It's a full orders taxation tool of the additional wealth. They're different in the essence. In this situation, the tax law faces the wall. There will be new institutes of law. They will be moving from the income tax. There will be innovation, a tax on the distributed capital. So one can notice, for example, one of the manifestations of these trends saying ahead, so digital service tax. Many countries in the EU understand the institutes of control and automation. The taxes are paid based on the fair conscience. The states are blind. Actually, they not see, despite that many are fond of informing about. But now the country doesn't know at all and won't know. That's a few words about briefly about CFC. There are two main trends in which we will look what is going on. I consider that a key to understanding what is happening presently. You know, it's easy to speak about Ukraine. Why? Because we're strongly backlagging with regards to the introduction of the legislative different institute. The CFC tools are known in the US just back from 1973. They were of different formats. We have introduced just recently, but many countries practice a long period of time. And that is with the protests we are still behind. And it's easy for us to guess what will be the future, what is happening in us, and presently such initiatives were established in Europe 5 years ago. Of course, there are some particularities of our country. There are different conditions of the economy, of the culture, of the political culture. And now we're talking about the origins of the trends. And after that, we'll single out those trends that will be implemented. And then we'll talk with what national particularities they will be introduced and how they will be operable. We'll start with the reform factors. I think we should single out three organizations. That's the FAT, OECD, G12, and G20. OECD. It is a so-called think tank. Scientific and research center, big center. They invest a lot into development of the Institute of Legislative Law. They have invented the CFC, the capitalization transfer pricing. They just invented this permanent agency. FATF, the same, but with the financial monitoring is different. That there are black lists in the FATF. There are lists of terrorists, also of the They just list countries that do not disclose information about the beneficiaries. Just as G20 is a club of the let's analyze what FATF suggests, and then in their communiques and releases they introduce it is just commercially speaking without G20, just OECD is just has only proposals. Out of the tax law, PAPS is a novelty. One can speak a lot about it. It's a kind of just an attempt to check whether institutes are functionable. So far, it is implementable, but mostly because of the taxpaying countries. And in our country, it is not so successful in operation. What is the core about the PEPs? What should be underlined from the point of view of the CFC law is enacted? Are there many of these laws? And CFC law won't be operable if taxmen won't get the data about the accounts of taxpayers. What is the need of CFC? Let's briefly explain. The CFC is needed to remove the so-called purse wallet companies. Let's take, for example, I have a production company. We are just sewing just curtains. Yeah, I may allocate just dividends in different forms to the accounts of my offshore companies. I do not promote anything, but I don't call only from the offshore company. There is no control over the there is no taxation as such vis-a-vis the company. Controlling the wallet company between myself and the offshore company. Thus, I won't allow the transfer of the ownership into the main of the physical persons. Then there was no tax reliability period. But theoretically, if you take old institute that the moment of distributing the profit, when you use the money, the beneficiary have had additional wealth to be declared. But thing is that it is not possible to trace, to catch, but to hope for the discipline of the taxpayer is utopical, because they don't have the competency to trace and track this revenue. This is the improvement of the normativity. Like you have said, that there is merging of different branches, which would result in the appearance of some new institute. And it's again, you corroborate. It's difficult to corroborate which companies are controlled and what tax. Probably financial monitoring will help about that. Well, I agree. You say correct ideas. The financial monitoring collects this information which is needed for next control. In practice, the financial monitoring collects information for what? Not to just to fight to the proliferation of the weapons of mass destruction, to fight terrorism, and to fight money laundering. But this is information. It is very efficient for the functioning of the financial system. Tatiana, your opinion. What is your opinion with regards to the financial and ML compliance in terms of PEPs is operable? What can you advise? Svetlana, do you like horses? Well, my attitude to them is just neutral. Do you know that in the genes of a horse there are dinosaurs genes? Not all dinosaurs died out. So these nice animals jump. They survived the area where these animals, which you mentioned, remained. In accounts strongly that at the next conference you introduce ourselves. We have survived so far, but in 5 years, I don't know what it will say. And now we'll move to that financial monitoring which you meant. Appearance of the world in a day or 2 days. So there are all grounds to consider it will be more complicated than it is now. The global world just covers all. First, we seen that whether the networks were chains came and small and medium size, forgot they should operate within the country. They left the market. Just average companies. Regretfully, they do not bear that. They do not sustain that tax load, administrative load they are to get out. We've been talking about CIFC. CRS has not come yet into effect. I think that's the immediate future. Next, in order for this administrative burden to match, just you would tell me how difficult to keep professionals who are working in such a difficult mode relates to the financial sector. Who can to say that
if the changes are useful, the changes which are going on, how to save money, keep them in Ukraine and live quietly having that money. If you asked me about tax amnesty, what I'd advise my clients of, I watched a lot of attempts of tax amnesty. I watched my clients, they asked, what do you think about this? Shall we or shall we not? Will it be easier for us? Forgive us, etc. I didn't give out any positive advice. Why? I believe that this is not the tax amnesty to calm down a person and to save money for clients. Andrea, previous speaker, mentioned that Article 209. This article tells about predicate offense, evading of tax payments. And again, this article puts into zero all the liabilities for tax and declaration. But if 90% of rider attacks in this country goes with the support of law enforcers, we understand, us and me, that there are a lot of corpus delicti that tax amnesty deal with. Imagine there's a tax amnesty, tax declaration. Nobody guarantee us that the amounts that will go into accounts will not be the matter of financial monitoring. So monitoring will be exercised towards all types of assets that will come to Ukrainian accounts, and financial monitoring will be dealing with all types of assets declared in Ukraine. Again, the the manner of this financial monitoring, according to Ukrainian legislation, this Ukrainian legislation says that the banks, as a subject of primary financial monitoring, will consider any types of assets that will be transferred to Ukraine, any will be covered with this financial monitoring. It means that if you do not tell about, do not disclose the source of income, or source of your capital, or source of your assets, then you will have to answer a lot of questions. It depends on the situation. Would you like to legalize your assets in the territory of Ukraine or not, or probably you are planning to import certain capitals of money assets. We tried to understand for ourselves the possible ways of paving our path to the future. And this Article 466, will we be able to use this article and the articles of code? We asked several times tax inspection what is their understanding of the situation. We understand that any tax inspection won't give us any advice. They only will give us a citation of tax code or criminal code, etc. So, having no clear understanding what we should expect in case we come to a bank and wait for our money to drop to our accounts from foreign accounts, what list of documents bank will expect from us? What do you think? We don't want to bring money to Ukraine to put them to the account and for banks start asking questions at that time. We should understand that we will have at least some relative calmness here. At a minimum, understand Article 466, we'd like to bring certain money here to Ukraine with certain minimum interest rate. We will be able to do that with Ukrainian banking system. Banks are quiet. Banks do not answer these questions, and they will not answer these questions. Again, remember financial monitoring of foreign banks situation, and the situation here will be the same. When money are with bank account and you have at least smallest chance to examine those money for the sake of the state, this opportunity will be used. And the financial monitoring to come, it will demand from you once and once again that confirm the source of that money, the source of prehistory of this money. I'm not idealizing, I'm just telling you about facts and figures. 10-15 years they try to trace back, and bank does not understand where did you get this wealth. So we are speaking about many documents dealing with the gaining of your wealth, documents confirming the funds movement on your account, and you have this to make your banking history bad, it will use it. So next step will be your account will be arrested. So the best way they will unblock your account 200,000 hryvnia in Ukraine or 100,000 euro in Europe, unblocked money. So I do not recommend tax amnesty use. maybe somebody is interested in innovations of April this year. 4 new positions, increasing of threshold level up to 400,000, and 4 criteria added to 17 criteria already existing. So we went through the entire procedure to get certificates of specialists in or experts in financial monitoring. We studied a lot of handbooks. We were interested in some other things, to speak to people that are working for financial investigation, and I was interested in the question how regulator is dealing with the great amount of information that is coming to a bank daily. If before we had 150,000 hryvnia, that was the lower threshold for monitoring, we may understand what amount of signals. And of course, regulator told us, of course, we are just suffocating with all that amount. When I read the cabinet resolution 2, there's a lot of steps, Ukrainian obligations, what should Ukraine do. So we yet not reported how many investigations already been completed and what is the total amount in order to remove human factor with financial monitoring with that procedure. So what does it tell us? That the program for that is being dealing with that information, they just say people that are not able to digest all that information. So that's it. Means that the data on the transactions history, etc. Do you like to communicate to chatbots? I am involved in that communication for last 2 years, and I'm not very happy with all that. Those are formal things, and they never could give you normal result that could be used as a evidence basis. So not only threshold figures, but as well laws has been changes. So in what case you are obliged to inform regulators? Means there are a lot of countries that are not involved, not participating in money laundering, etc. Probably it's North Korea, Iran. So you understand that there are only 2 countries in the world where financial monitoring not send the information about you. Again, publicly exposed persons, they are different issue. And again, if there's an offshore company and you transmit money to that offshore accounts, okay. So we have a timetable here, and I'd like to ask you, what will be your recommendations as a lawyer to entrepreneurs in sense of financial monitoring? I believe that this or that way you must disclose. If you have foreign companies, you must disclose as well. For 10 years, I see the so-called cleaning of the house. So everybody who'd like to be clean, they've already went through that procedure of cleaning of their houses. And you understand, in fact, that this cleaning has already been completed. What if there are companies with certain accumulated assets, and these assets are invested in real estate, etc.? Probably the best way is to use Article 466 and use liquidation procedure in order to clean up all that. Speaking of the lawyer's advice, first of all, I recommend, speaking of CFC, to prepare auditor's report in order to prevent the as for property valuation. You need to immediately give professional valuation of your own, for your assets, for your property, by means of Ukrainian providers, for instance. That's it. My advices. In your opinion, may it be bypassed, this financial monitoring procedure, or not, after declaration, if you have CFC, for instance? Financial monitoring, to bypass it? No, not in my mind. Which way? How to do it? Just do this step aside, that's it. If we are speaking about any type of transaction, and again, to say nothing about lawyers, solicitors, brokers, advisors, auditors, legal firms that are objects of financial monitoring. So my colleagues, they at minimum register their companies, and they immediately become the subjects of financial monitoring, or entities that should be monitored financially. So please do not take bankers as friends now, because this is a tradition, of course, but judging the questions the bank asks, I understand that, yeah, of course, could be the case when a client could have a bonus from his client, and we know, according to the instruction, that all the official information, all the communication and correspondence between you and bank, even after, say, canceling any relation to store for bank archive, and they could be considered as evidence if there's any of criminal type litigation, etc. So this is a recommendation, first of all, to be very careful to pay taxes to the extent that could be pursued by Ukrainian legislation, and yeah, to be quiet. It's very sensible recommendation. And of course, to approach lawyers that could be okay, certain of course, certain still are in the plane of lawyers' secrecy. Dmitry, the approach to tax structuring, will it be changed somehow? Good afternoon. Let me start my presentation. So we gathered here minimum stations, expecting that you've already read draft law, and now this draft law kills all the amendments to 25-24. So it was for me better to gather all recommendations for our clients we've accumulated through the time. Try to find solutions in law and assets plane or field. Speaking of CFC, we tell our clients that we have two woes here. First, expectation, will they tax us or not? Secondly, will our report be approved or not? So the second challenge will be worse than the first one. So why we should not disclose our foreign companies? And second question, if we do not disclose, what will it be? So formulation of 466, the country must have the jurisdiction Singapore, Emirates or Cyprus. We have a convention of avoiding duplicate taxation, and probably could be passive operation transactions like royalty or investments, etc. Maybe we will go deeper into detail later on.
Yet easier to be small in size, $2 million not to strike over the CFC. Then we were asked whether does profit or revenue, and as for the S4 MS4 rights. Turned out that the turnover might be formulated as an income, as a profit. The difference between the sold and purchased securities were not just big accountants, but we have identified such a niche. Probably there is some pool for creativity, but not just the revenue, but the profit. One only should be inventive. The third solution: to perform a function of the holding and receive only dividends. In the law there are three provisions. One relates to structures in abroad, like Malta, who just owns the structure in Cyprus. And then it doesn't take the same structure. Cyprus, Ukrainian plant earned a lot of profit. Then the Cyprus revenues. It allows to combine elements for different structures, for example, Cyprus trades, and due to that reason, it does not tax, because the convention and the active, and there is a holding over it, which does not tax, because these dividends are not distributed. They are excluded from the taxable profit of the holding, although they are present because of the participation in the structure into some ways. But if we answer the question why it is not taxable, and then to go for the IPO, there are a dozen Ukrainian companies which either carried out technical or full-fledged IPO. Just IPO lasts for 2 years. If technical, just 6 months. But this option is not a new one, not possible. The question is only money, and agree the charitable organization, frankly speaking, we does not test it. As it is written there about trusts and funds, but I have not noticed the Ukrainian beneficiary owners who would like to be reformatted into the discretionary funds and trusts and laws their functions on managing their overseas assets. A more complicated topic when tax returns not necessary to be submitted. Undoubtedly, there is a topic of changing the tax jurisdiction. When we put the question to customs, do you want? Well, you lived mostly in overseas. Do you want to change your way of living? Probably 20% I'd say affirmative, that they will live in Cyprus, Malta, and Emirates. 80% say they are staying and only a residency will be provided to them in Cyprus. But the question is how the Ukrainian tax service will treat it. Whether there will be legal grounds enough to say that they cease to be Ukrainian tax residents. We analyze different cases and we see convention more applicable here, which mostly complies with the Ukrainian law. That is, they look at the permanent location at the center of their vital interest where the family analyze this duration of 180 to have technical residence abroad and to live, to reside, to work in Ukraine. It's not the final solution. It can be just a bad solution in our opinion. And such a strong decision just which to recognize as a Ukrainian resident by the place of efficient management. As it turned out, they don't have any relationship. They can trade with China. They live in Ukraine simply. It gives some interesting aspects. We say that they disclose to the Ukrainian tax authorities about how to pressurize them if they say that the Ukrainians and there is a preference for income profit and beyond the borders of Ukraine. So this solution requires some bravery to go and to register as residents. We have selected just a basket of advantages as for the rate of efficiency. That's the exemption from the CFC, to remove the necessity of the permanent resident agency, and just also to be void of the repatriation tax and so on. To liquidate the CFC, it was discussed already. I won't reiterate to a very popular solution. Many opt for it. From the underwater stones, these are procedures to pass them correctly, not to evaluate the cash in but the timely submission of report of tax returns. Then the questions whether the account can be closed and then move into liquidation. Many foreign liquidators require not to have the problems with the liquidating, but how to prove that the money was on the money is the same liquidation massive. So there are some solutions. I won't deliberate about these options. Someone puts money on the escrow account. Someone establishes an account with a more comfortable jurisdiction. People find fun about that. As we have two liquidation preferences. One is related to those who has got orientation quickly before June 30th. That's both this military charge. And the second liquidation preference, small even haven't been for Nina Petrovna said, treason, let's bourgeois pay at least 1.5%. This part was not accepted. Now it is and it is brought to the voting on the another product, but this preference for this military excise tax is not exercised. So we're waiting for voting. That's what we tell to customer. Trust or the fund, nothing to control of. But our customers didn't like this idea, and to own less than 50%, if, you know, or 20% together. So that's, and they say let's sell 90% to some Cyprus resident with a right of a reverse buyout and with the freezing of this 90% of shares. It confronts criteria of say the company is in the control of this 10% shareholder. Permanent residency and agency. The risk are this. A foreign company that is controlled by a person who lives here in the Ukraine that will be recognized that they have the permanent agency in Ukraine, or this rule, which is interpreted by the authors of the bill as the rule, will be transformed into an obligation. All will be obliged to register our foreign companies as tax residents. We regularly inform about these risks. We trace the disputes, but we also are just tentatively listening to what the taxman representatives say. Will recognize the permanent agency despite our present failures. Therefore, we would advise not to issue the general power attorneys, not but to appoint directors and to create a board over the board. Again, it is not convenient to all. People are used to exercise control over accounts, and then we ask what are the options. Let the director initiate a dual block. You will not have the center generation profit. We discuss it a lot, but it's the issue of conscience to be restructured, or otherwise you will experience risk. I already informed about that. And now we move to the beneficiary owner. As for the beneficiary, these requirements to by the Ukrainian tax authorities and Ukrainian coins. As for the objective criteria, whether they are present or not, the first solution is it is less known. In the guidelines of the OCE, it is that if you do not abuse or underwent the principal purpose test, that there is no abuse on obtaining tax, then the test of the beneficial owner is carried out. But in the Ukrainian judicial case law, there are examples. One such trials were conducted. As for the Dnipro railway branch, to corroborate that there was no abuse. There was an issue of syndicated lending when 3 foreign banks were loans in syndicate to a Ukrainian company. Those who were behind it were not pursuing the objective of avoiding taxation. Probably the second option to ensure the level of substance. We have analyzed long the Ukrainian case law, and then we agreed that the spectrum of the solutions is quite big. There is judgment on Poltava mining company, where they were paying 2 million payroll to this 5 million. Then they were paying a different tax and had the profit of 20 million. its real substance is clear, although the tax authority considers 70% of the profitability as a small indicator. But you see, to roll away to a foreign company for tax authority to say that this is there are examples of the opposite when courts state that Cypriots are not owners. The Ukrainians are. The diapason is quite wide. We try to palpitate some solutions, but you know how much customer. But we start this when we start discussions how to avoid differences, not to create back-to-back liabilities. There are many businesses. So, for example, like a loan was taken from Cyprus, and Cyprus has taken a BVI from a BVI. It's already past century. It's from BVIs to Cyprus. There will be no topic that Cyprus is owes something, therefore it is not the beneficiary owner. The advice remains the same and popular. An interesting thing appeared to say, yes, we are not beneficiaries, but those to whom we pay, the actual beneficiaries, they remain in the countries under the convention. Let's apply this convention. It's appeared in the law for 6 years. When we have this practice, and we've been awarded a smaller rate of next because that convention with the third person party is better than with the convention. The test of the primary objective. The test of the primary objective, what we invented, general rule which crawls from the from the past to prepare a business plan, to incorporate it into the policies, into plans before it is implemented on paper by lawyers. In case of a loss-making transaction, that either losses were made due to objective reasons or it is written by our Supreme Court. If you need to pay payroll but you don't have money, you need to sell something even with the loss. Either way, if you do not pay the wages, you will be punished more than for a loss-making transaction. And then to also to be informed about the examples of the OECD. They are very interesting. I won't report on them because of the short time, but there's there are so many interesting explanations when does the convention has the common objectives and intentions of parties that transfer of their companies to new jurisdictions. We popularize it, by the way. I'll omit it, I'll skip it. Constructive dividends. We've been thinking what is to be done with the constructive dividends. The simplest and the vulgar advice to be below the radar. Below the radar. That's not to go higher than 150 million, create another account. To decrease the chartered capital, to observe, not to lead to the decrease of the undivided distributed profit for big companies that can allow themselves to establish this to grow in size, not to deal it in the next year but present year. Particularly it relates to the exchange listed commodities, particularly when it is cereals. 30% tax adjustment to interact with counter-agents, with jurisdictions with a low level tax. We have contracted that some customers, before introduction this law 466, they were registered in other countries, but to invest into the transfer pricing, it might be more expensive than to change it. Although one should calculate it, what is more convenient. Depends on the turnover. They might be on par in costs. Now, just find capitalization where screws are made tighter. One of the criteria, loan of the address of the burden of the capital is the owner you've taken $5 million borrowed from non-resident, capitalize at least 2 million. Now it's not already 3.5 is now in effect, then it is a criteria for the expenses. Two other advices to increase the chartered capital, and the second is to borrow. We know that an alternative option, which has been argumented, working to borrow from non-residents. It's desirable not to mix non-resident resident debts, to take loans that are not models. When you convert loans from the investment, just short long term, the idea is to bring loans from Cyprus to some Ukrainian investment fund. The sale of securities by non-resident. Two options. If the real estate is over 50% inside the shares price, to bring it, to transfer the sales to the Ukrainian investments, just to bring it where they are not taxable. If the real estate establishes less than 50%, to take care of good convention.
The Cyprus Convention already creates certain risks, and many companies they structure their business entities tied to Cyprus, so you should move it to some other jurisdictions. There are certain intermediary advices just for this intermediary period. For instance, they regulation till 1st January, then you may transfer this transaction to some other transaction, and you need to watch the voting in the parliament. And again, personal income tax, the rule of no less than nominal price with selling or buying. Not necessarily we could purchase or sell at market price, so best way to hire a certain evaluator. And could if CFC is physical person, CFC as definition is not yet in force. It will be put into force starting from 2021, so it could be until the time this intermediary time before putting CFC into force. And again, certain amendments and changes to 4065 draft law, again to transfer certain other documents. To my understanding, I'm out of time. Thank you, Dmitry. This is actualization survey. You are not probably fighting against, but nevertheless you protect certain. The question is for what provisions you advocating. Last two slides. These provisions should be voted completely, and that was introduced all of a sudden from 1st July. Now we're speaking out about the restructuring. We have certain proposals. We are waiting for New Year pack of laws, package of laws, to start with that comments. So all the permanent, they should be registered. And again, 80% they are non-commercial. So for them, it is preferable to have certain provision. So you just declare in free format that you are not commercial, but you are permanent. Where is your report for transfer price and etc. We suggest to clarify rules, speaking of Ukrainian holding, which is suspended over foreign jurisdiction. There's very interesting discount. If over 10%, then the foreign investments are not taxable. Then Ukrainian holding should report about CFC, and its beneficiary is free of tax because they're afraid of personal liability. Yeah, it's interesting. In fact, those regulations are already in place. We see certain drawbacks in them, and of course we'd like to say make it better. Of course we should make certain smaller amendments. I suggest that we have a coffee break, and a last session will be devoted to transfer pricing, certain mistakes the taxpayers are facing in the 4:45 p.m. Please come back here. Friends, we continue, so we have survivors here. Nevertheless, the issues to discuss, the rather specific, the narrow profile issues. Nevertheless, they are very important. First presenter will be Sergei Rogozny, who will tell us how to adapt and to manage. Good afternoon, dear friends. Wish everybody be healthy, wealthy, happy, as people, companies, they are born to achieve something. There are certain different risks in our life. And speaking of financial management of companies, you should expect certain risks and hopefully minimize the influence on the company activity. This will be our topic. Okay, so we have a company. When we set up a company, owners, management of company, they understand certain meaning in that. The prosaic goal is to earn $1 million, but there are certain social tasks and goals we try to set up before ourselves in order to implement, to realize endeavors. You need resources, partners, finances, counteragents, and in fact we are going here into the competitive field, and again we have certain legal environment created by the state. So we should analyze everything component by component, and we need to evaluate the influence over our activity, because in our business process probably could be certain circumstances leading us to negative consequences we call risks. Speaking of risks, risk is a probability of something, something meaning certain a certain certain environment. We may have losses, probably lost income, probably reputational risks. When we analyze everything, then we should understand certain rating for factors, means to what extent they influence us. I mean the negative factors. Speaking of the probability of happening this or that, and from the point of view of say if we have certain high probability of this will come and will put us into a higher risk, then probably not worthwhile to deal with a new supermarket or new cinema hall. Again, we have a quarantine. Then as well, we don't go into that. When the risk is rather potentially high and the loss is potentially low, like firing a lot of personnel, etc., or probably some repairs according to guarantee or something, and it must be part of our business, and financial management should have certain guarantees or certain collaterals. So if we have a higher probability and potential loss is low, you should reflect this in your reporting. If we're speaking about fires, terroristic attacks, the losses could be high, and the best way is to insurance. The way the company works means if this is an agricultural company, for instance, the major playing factors here is the state supporting or giving discounts, technologies, to what extent we are productive in our activity, in taking into account climate changes, long distance communications, financing, and public, because in rural area business goes nicely only when you are friend to the locals. Then the locals will bring their shares into your company and they'll start working with you. If we are dealing with pharmaceutical company, then importance of community, but high importance lays in the field of technologies, communications, legislation, and competitors, which differs from agricultural producers, because your neighbors do not influence your production. If we work with the retail industry, chain of stores like Silpo, ATB, different situation. They do not think about specific clients, because people, they go to the nearest shop, and it is of great importance that no competitors are closely placed. So they will buy. Media business, there are influence factors here are politics, public, culture, and again you identify all that factors depending on the sector you work in. Speaking specifically, one and the same situation for each and every businesses has different influences. For instance, firing of qualified experts in agricultural sector, the risk is minimized and the loss is minimized. If we are speaking about pharmaceutical industry or media industry, the business success depends on a specific person, and probability is higher. In retail, nothing changes if shop assistance goes and comes. And the limitations of export, import, more expensive, less expensive energy. Again, direction of your business activity towards west or east. Retail again brings you different factors. When you build up this type of risk matrix, you should make your decision. If we don't do this, then the auditors will do this. If they understand that your environment connected with high risk, then they will make their own conclusions. And in civilized countries, their opinion influences capitalization greatly. Means auditors, they try to understand the risks. And they try to understand if this company will be successful in 1 year time as well, analyzing the risks. And in fact, they make their repetitive diagnostics. They make their diagnostics, they make their opinion, and I understand that not everybody of the audience is accountant, so if a company has certain resources, assets, controlled corporations, and in the future they could give us certain gain. There could be a lot of assets, but as well we could have a tremendous indebtedness. So unless you see the balance, you couldn't understand the real situation. Levels of liquidity. According to international standards, we make evaluation of risks. First of all, we are speaking about liquidity. Are there enough money, enough funds in the company to pay for the debts? Three types of liquidity. Absolute liquidity is comparing amount of funds with our liabilities. Could be urgent up to 3 months or nearest up to 12 months, and of course we expect that our clients will pay us. When we add debtors to this amount, means clients that yet not paid us, will be urgent liquidity. If we add trade resources, then we'll have the entire turnover capital or in capital. We understand that all of our assets are higher than all that liabilities. Then we are speaking about the negative working capital, and it's potentially risky. That's why we need to make certain steps. The principles of managing liquidity. If we have certain resource to be invested, or we earned certain funds, we may leave them in the bank, but it's not a guarantee. We need to develop, we need to make profits, and we will invest all that money. So in the lack of resources, we must stick to resources where you may recover your investments. And we need to have this prevailing liquidity. Liquidity analysis. This analysis must be in place once a month or even more often. The check of preparedness. Sometimes everything is okay and quiet, but all of a sudden you need urgently to invest, probably in order to set up a new project or probably to pay for some outside risks, for instance, fin monitoring.
And we should have a store of solidity because of our positive relationships with our partners, customers, just lenders. If we have good, stable relations with our customers, we can provide to them some delay. We'll give them opportunity to pay less in advance, that they will pay sooner with us, and we'll have no more future risks. Insurance, those financial assets which we mentioned, those liabilities, they partially might be insured. We can transfer some of the risks to insurance companies. However, when we have written in the balance sheet that these are our money, this will be paid to us in a month or two, and then the lockdown was launched, the production stopped, there is no sale, what we called next profit turned out to be nothing, and now we have the lending risk. We have provided loans to someone and they may not pay to us, and then in our assets we have that we cannot consider some of these assets as financial assets of some assets or some production that have been stopped. Under the standards, we should create contingency for expected financial losses. The moment we just loaded the commodities that to carry out this demonstration of the financial conditions to be real, to reflect what we have. We should apply also discounts, insurance, penalties for non-compliance. As you see, insurance, the relevant topic that what we have in disposal to be insured all companies. There are companies which are ready to provide money for the collateral of such goods. Factoring risks are relevant of companies of socialist type, like they were in the Soviet Union, and of the capitalist time. No matter where there is money, liquidity may not be enough. The moment the market is open, additional range of market risks appear. Therefore, I name it risk of capitals. Only companies which work in market or partially market conditions, so they would like to travel to Poland, where they have more the market of currency. The moment this change might be negative or positive, we should contemplate it, and just then the price market, the currency market. How many markets are of both buyers and borrowers? We may find so many risks. Therefore, we should identify them then. As for the standard, as they say, to hedge risks. If we have a risk that the hard currency would fall and we have loans in hard currency, then we should find a chance for the hard currency to be borrowed. These three risks we mentioned, they might be partially or fully covered by the insurance. Then it might may say a universal rescue. But not quite so. The thing is that insurance companies, they are also business entities. They would like to earn more money. Therefore, those in attendance and who have dealt with insurance, they know the challenge to have the compensation from the insurance. That's for example, if we insured the yields from the field, but there was no yield because of the drought, then they brought the inspectors and said that that field was always dry. And so what is the way out? To find a person who will be speaking with the insurers in the same language. The coverage of the risk on the default of insurance should be handed over to such specialists as insurers brokers, when they receive some minimal commission fee. Before you conclude a contract, would analyze it, would select proper choices. And when the insurance case is in effect, then they say that there was such whether you by 50 or 60 by 40 for non-paying compensation by the insurance to keep the loyalty of the insurance broker. It's better to step back, and then the company will get additional. But that's all on me from my side. If there are questions, all the best to you. Be healthy, and if you are interested in international standards, we issued a small book on the short course for practitioners. There are no questions from the audience. You see, a couple of years ago, at the Kiev Economic Forum, when question was put to the speakers, features should be brought up among the people. That's the question of the adaptivity. All today's meeting demonstrates that adaptivity is needed by all of us. We should be adaptable. To manage finance presently means to manage the situation those who are not reinvent cannot develop. It's a small summary of today's meeting. Further on, in our just agenda, we have the transfer pricing. Like a small snowball. When it is small, it is not dangerous, but when it grows in size, you start that it might be a major threat. On how often such mistakes are met, out is making our fairy ladies. Elena Wisniuk. Lana is the partner of the consulting agency Nixon Dekar Auditing Consultations. We are acquainted since 2016 when Lana was head of the Ukrainian Foundation, Ukrainian Financial Association. In Ukraine, we speak about analysis of the most typical is Tatiana Savchuk, director of the Department of Accounting and Reporting of the ID Legal Group. Tatiana will inform about typical mistakes and manipulations when transfer money pricing is created. And Anna Nikolaika, she management on transfer pricing of P in Ukraine. In transfer with the export of the raw materials. Anna will speak about that. Please then put below the presentation of Lana. If there are questions, please write them down. Just not to be delayed for the evening jazz party, as we have just 15 minutes. So about the most important, not frequently met mistakes which we observe in our practice in the particular of the transfer pricing. The topic is rather complicated for the final hours of this conference, but we will try to explain it in the maximum simplest way. In Article 39, there is such a provision which says, if there is an opportunity to apply the first method based on the comparison of prices and any other method, then the taxpayer should apply the first method. Presently, this provision has been removed from the tax code, but approach has not been changed. Still, a dominating method 5 does the first method. Because of that, what most typical mistake? Transfer pricing has emerged in 2013 in the first reporting period of 2000, as not all taxpayers mastered right away the massive knowledge of transfer, submitted first pricing reports, probably mistakenly indicated in their reports the selected method for the grounding for the observation of the transfer operation. Everything just went till 2016 or 2017 when we started to customers requests from the tax authorities, which read as follows: that the tax authority, having analyzed the report in the procedure of monitoring under the transfer price, and that the taxpayer indicated the first method, and the tax authority considered that the first method is not applicable because the company is engaged in the production of the manufacturing of aircraft. That's and the tax authority doubts whether it is the first applicable is double. When the taxpayers applied the first method because they should not be applied the profitability. What indicators should be included into the profitability? And then just because of that they refer to the first method. Since 2016-2010, very often queries to taxpayers were sent which specified the first method about the reasonability and possibility of applying the first method. Now what we see now in 2020 the support with the coming of the various related measures. The tax authorities send queries to all, not only the debts but also to the transfer pricing related questions are more in number. They moved further. I mean taxmen, where you applied the first or second method. They see that they carry out analysis of the reports submitted to them, and if the tax payment specified the second and third method, they ask why you applied the third and the second method. Just and as if you don't have the internal comparable, the controlled operation just relates to the exports of the manufactured products, and the tax authority said that based on the financial reports, there were no other export operation. The proceeds were generated associated. The second or third method were not applicable. There were no internal comparable transactions of the counter region. Usually such requests are sent by local self authorities where taxpayers are registered. It's not the request of the documentation to be sent, but just an interest on part of the controlling body, where particularly this method has been selected by the taxpayer. For such requests, there is still yet a moratorium in effect. And one may just answer such questions either in a neutral way, just explaining just in general forms, and just without going into the specificities, because the only state fiscal service is entitled to. The first typical mistake, an attempt to specify that method that can be applicable by the taxpayer, then other mistake that not correct choice of the profitability. There is a clear method to what type of profitability, what method is applicable. And as for the fourth method, multitude of indicators of profitability might be analyzed. That's where most often mistakes are made. If a control transaction is an import-related operation, local distributor bought a non-associated distributor and sell it not associated persons in Uganda, and without a presence of the internal compatibility, the most just indicator of the clean profitability, because the costs have been generated within the scope of the control transaction. But often we see here there's not a deep analysis of the tax payers. One should pay attention to that. And they analyzed persons. It's the indicator of the profitability which we analyze. One should choose that site which is to be analyzed, which we should calculate. So we see here a case when this site is not the resident, because they do not take particulars, and in most cases they might not have the assets, because it might be an intermediary between the production companies and the taxpayer and Ukraine. Then there is a need to test and to try to choose the correct site which we analyze and test. Sometimes when the supplier is not an associated person, therefore is not fit to choosing the comparison, but not proper debt choice, but with the availability of our financial indicators for the calculation of the profitability indicator, we see that very often taxpayers just specify not that purpose. Another interesting position which already exists for many years in the tax code, that the volume which we calculate to calculate whether we have these controlled volume operations under Article 39.219, based on the extended arms principle. Based on our experience of our customer, the producer of the foodstuffs has analyzed its turnover and observed that in potentially controlled transactions was about $9 million. But if it is not a control operation, because there is no 10 million hryvnia operation. But when I started to analyze this transaction as for the matching of the principle, the extended arm principle, we have seen that to comply with the principle of extended arm, irrespective of the price, I analyzed the indicator of the bulk profitability of the self-call. That price will match. That will lead to the proceeds higher than 10 million hryvnia. If we count the volume of this transaction, that this volume it will be more than 10 million according to the data.
So he must submit a report on control operation, otherwise there will be fines and penalties. Functional analysis is next speaker's compatibility operation. If the internally compatible operation, you need to analyze the subject of compatibility, and in many cases we see that the payers should analyze a great volume of information, so all the operations could be compatible, and you need to analyze it and understand if they are compatible or not. And in many cases we just see that in many cases they reject that. For instance, importer buys controlled operation certain commodity and the 20 non-resident suppliers, and they sell the same taxpayer products that are compatible. Speaking of functionalities, for instance, foodstuffs. So in this situation you need to understand everything, analyze all 20 items, understand if they are compatible or not. In this controlled operation we are speaking about the functionality, and they are compatible with certain smaller differences. For instance, delivery conditions, they need to do certain corrections, and next make them compatibility, and then you compare profitability or rate of return and compatibility, everything. So these are the very common mistakes. Probably the Q&A postponed till the end of the session. If any questions, I will, after all the speakers will end up, then I'll be ready to answer your questions. Thank you. Thank you very much, Tatiana Savchuk. Tatiana Savchuk will share her analysis. What manipulation are common in functional and economical analysis? Good evening. Thank you very much. I watched Yelena and I understood that in fact all the mistakes Elena mentioned, everybody makes mistakes because of lack of experience or lack of knowledge, lack of skills, but certain people, they do something in order to make better analysis. So all that mistakes could be treated as mistake or manipulation in speaking of functionality and economical analysis, this is nearly 90% of documentation of the analysis that should be affected by taxpayer in order to justify that pricing in their operations is in line with the principle of stretched hand. We may discuss and deeply. So we must put a stress over certain very important notions. Not only Article 39, probably this is one of the most often changed article, but we're speaking about a normative regulation with transfer pricing. But first of all, we're speaking about the source directives of National Commission on pricing, and a very high role is taken by the litigation practice. So not only we're speaking about transfer pricing because of failing to report, no, for instance, the range of issues, etc. Very illustrative examples, and they make a basement for understanding by taxpayers of the tendencies and what they should expect from tax people when they come with their audit. The tax code itself is correlated with the directives of UNSR, and it says that the compatibility is one and the major condition. Control and non-control operations. The compatibility of them is determined by certain components, certain factors. They should be monitored. We're speaking about the total list of components to determine if transactions are compatible or not. All the components of functionality analysis, as for the risk of asset usage, as well the certain other components like market study must be ran. Analysis of commercial strategy of the parties, and of course the assets that are used by the parties. In principle, all that regulations are stipulated by tax code, and in fact they constitute the foundation of this activity. The major goal of functional analysis is to determine and compare the activity performed, speaking of controlled operations, as well to analyze the responsibility and liability of parties, used and non-used assets and risks. Again, the payer must understand the specifics of the other party. Based on that, a method of compatibility must be understood, and the features of controlled and non-controlled operations must be understood as well. I would like to my understanding, the audience are survivors, and they'd like to hear some practical recommendations to understand steps that should be present in functional economical analysis. First of all, we are speaking about the period of time of this analysis, the most applicable period is the period of controlled transactions, but in some cases, by the moment of analysis, some of the data are not in hand. For instance, the database is still half empty, or influence of certain trend or economical phenomena, and may it be useful to understand all the trends for 3 years. And about the non-controlled operations, it is necessary to understand clearly and identify the characteristics of market and the activity of taxpayer itself, and identify the functional set that is characteristic for this or that taxpayer, because the sector itself may be too broad of a notion. For instance, we are speaking about pharmaceutical sector. For instance, such type of activity like a wholesale trade of pharmaceutical or medical items could not be a reason for compatibility, because one company could be global distributor. From the other hand, a company with wholesale trade of pharmaceutical items could be a trade house of certain producer, and they put the accent over certain names and products that only are produced for European distribution, or a certain distributor could be with the same type of activity, and he do not perform any specific functions. So sometimes it is impossible immediately to understand the profile of this or that company. You must go deeper into details and make a proper study. Next, you definitely must understand your internal indicators and understand what is compatibility operations the company has. Could you determine them as compatible or non-compatible, and could you compare them, or in principle you could not? Again, for mandatory steps in functionality analysis, we may mention here analysis of data sources, and in fact there could be a lot of specifics starting from the outside data sources with a lot of information on internal Ukrainian market, international market, global markets. Speaking of internal sources of information, the taxpayer could create within the scope of its activity. Next step, of course, is to choose a methodology, and there could be a lot of issues because the methodology, first of all, depends on the functions performed by the parties, but as well depends on the source of information, presence of full and comprehensive financial information that could be used in this analysis, and depends on the feasibility of the understanding of controlled operation, because the type of controlled operation itself is a limitation of the use of these or that methods. If we're speaking about the controlled operation like interest rate, any expert will tell you that you should compare non-controlled price, understand the level of rates on the assets attracted, and at the same time, in many cases, taxpayers could just evaluate this with the net profitability or another condition or another specific is who is controlled party, supplier or buyer, and we may speak here about the gross profitability or say rate of return and or cost of production, excuse me. So it depends who is the party of controlled operation. And of course, the identification of the parties to compare, or companies to compare, as say the result of previous steps when we have identified already the company profile involved in controlled operations, and we understand what specific components could be applicable to certain companies, and the companies are considered to be compatible or comparable, then this stage is very important, and in many cases tax inspections and agencies controlling this or say analyzing this or that functions, they say that you must include back this company in the list of comparable companies as its presence influences the market range the company operates, and this is it. Moreover, another probable step could be, in case of certain differences, corrections to be made, understanding of necessity of such corrections. We need enough financial information in order to make corrections and proper application of such correction. And to what extent it influences the controlled operation as well, I'd like to point out briefly with an educational goal what changes have been made to tax code today that should account, first of all, the provision in 4th article of tax code. It says that determination or definition and analysis of the function is based on the specifics of specific contract. It's not enough to open a contract and look through the controlled operations stipulated by this contract, but you need to be sure that all the conditions are observed or those positions are declarative and they do not work in a real contract. And after this functional analysis, it could influence as well over the process of choosing this operation. Risk analysis, risks that should be considered in functional analysis. The tax code as well identified them, and once again they take into account the actual behavior of any party and risks they are taken. For instance, taxpayer, does it have an ability to face this risk, or this is just a declarative article in the contract. So this actual, or say realistic approach is stipulated by Article 39 today. Results of functional economical depend on all the steps I mentioned, and I'd like to highlight here certain key points influencing results of economical analysis dramatically. First of all, proper identification of all the important conditions of controlled operations. Second, proper identification of a compatible party. Properly choose methods and operations or transactions to be compared. How these components and their proper usage could influence the analysis. First of all, we are speaking about the proper identification of all the parts of controlled operations. One of the cases could be mentioned here, and this is an actual case that I've already finished in proceedings. So taxpayer exercised the method of uncontrolled compatible price. He said that the conditions of the contract stipulated that the prices should have been selected according to this forward contract, and he made the conclusion that his price is inside of the proper range. But because some other additional amendments were made to the initial contracts, the court ruling said that if there were made many changes to the initial contract, then this form loses its meaning and it becomes a just ordinary sales contract, and the compatible prices must be considered as
the essence of the operations has not changed. How they were supplying the plant oil, then they were supplying it still. What functions were performed? The same remained. But such circumstance as just concluding an additional contract, which made amendments to the initial forward contract to change the effect on calculating the market spectrum, and it led to the substantial adjustment of amounts. So one can speak about it a lot, because yes, on the one hand, and the tax code and the regulation specify that the tested site should be the least loaded participator, which takes the least amount of risk, but the availability of the full financial information with regards to the counter agent should be also at the disposal of the taxpayer, which is a very important element here. As a matter of fact, to speak about manipulation in this regard might be only in those. Indeed, non-resident is not an associated person, not a affiliated person, and it's possible to gain information from that person, but due to different reasons, by the different reasons, or the taxpayers themselves just two fingers to, but it's more advantageous for us to analyze ourselves and not to intervene into financial results on non-residents. But right away after that, one can regard it as a manipulation, probably, when having an opportunity of gaining that information but not taking steps to get that information. Then one may assume it will be outside the scope of the market diapason. As for the correctness of it, I think actually the information has been already presented by Lana, but I would like once more to underscore that the principle when the taxpayer chooses a method, we've seen that as for the financial reporter. They calculated the bulk and clean methods of profitability. They have chosen with their fingers the indicators to which they liked most. So this principle is not fungible for sure, and the tax authorities, either through requests or through other tools, would see the non-correct character of the chosen method. I don't think it's worth to become subject of the inspection by the tax inspection, when only chosen method can serve a ground for receiving a request to present additional information. Further on, I would like then to demonstrate what Elena meant. Tax authorities. It's a screenshot of a piece of the request which has been sent to the taxpayer. They are not just making requests on whether it was declared or not declared. Indeed, in their analytical queries presented the motivation. They indeed analyze the market. We are not saying what companies they choose for establishing this market spectrum. There might be different questions on with the taxpayers received such queries. They might provide a substantiated answer to the tax authority and resolve many questions. But indeed, taxmen pay attention what has been mentioned in the report of their control attention. They pay attention to that but they analyze it with compared information, and they already drew some conclusions on methods. But as a matter of fact, in this situation, in addition that the tax authority made the calculation of the market spectrum, because indicators were not calculated by the tax authority. Moreover, one could specify on the use of the bulk methods. When the bulk method was more disadvantageous, indicators with such calculation were quite different, and accordingly there were arguments with taxpayers. After such argumented answers, no request on presenting documentation is not sent, so that the method was substantiated, and the calculations on the method were also quite clear. The choice of the indicator of the profitability these our topics overlap. In what regard indicators, which is the supplier, buyer, and both supplier and buyer overlapping in their activities. There might be manipulation. Despite the essence of the economic operations, the indicators are chosen which are more tractable for the taxpayers. Also, I would like to draw attention to such an aspect. Theophilou is a vehicle for, in some way, to manipulate while calculating the profitability indicators. It is segmenting. Segmenting is done for obligatorily if company has the mixed types of activities. If a controlled transaction is not entire bulk of the financial report, but only part of it, and accordingly, surely for segmenting, one should be well informed with your account keeping policy and to find proper keys for segmenting. This algorithm for segmenting, they should be as well substantiated. As a matter of fact, well, with this slide, I would like to prove that is in the first column that non-segmented financial indicator of plural profitability is 6.46%, and as for the segmented contract with transactions, it's already 12.65%, and with the control operation 6%, and there is another activity which is not controlled but is carried out by the company, where the profitability indicator is 82%. When you dive into the middle of this financial reporting and to submerge into how different lines of financial reporting to be assigned, which do not have direct mechanism of identifications. As for the control transaction, then one may say what should be a key for such segmenting, whether the volumes of sales or the volumes of expense or the volumes of some assets involved for carrying out different types of transactions. Depending different keys of allocation would provide different results of some and different levels of profitability. Here's, as I see it, on the one hand, it's a rather efficient tool for the profitability of a controlled transaction to be applied. But this is rather flaky. One should just argument that it is reasonable and it's proper to be applied here. As for the correctness of the use of the source of information, as a matter of fact, based on our practice, we have seen many cases when, even without referring that that allegedly source of informations are specified in the tax code, now it's quite simple. The code does not quite clearly relegates what relates to the raw materials and data, but there is a wide range of options used by the taxpayers to substantiate their pricing. Some online resources are there. That source, which illustrates well the pricing, is considered to be the best. I think in that regard there will be many litigations with the tax authorities about this matter. Then I would like to demonstrate probably all have heard about this case of Rivne Azot, which was won by the tax authority. But this case has illustrated in the best possible way manipulations we meant earlier on the method and on the tested side. Briefly, this subject matter that the company imported gas from the Cyprus-based supplier, and to state the pricing was okay. Then the method of non-controlled uh, well, compare a non-controlled price of the tester site, but they built a market range, and the conclusion was that everything was fine with their calculation. But as it was the Cyprus supplier, and this amount was more than 10 million. These separation transactions were the over 10%, and the tax authority said we cannot apply it. They applied the method of the clean indicator of clean profitability, just compared with the gas traders in EU. That non-resident received too big a margin, which is not margin, and accordingly made an additional accrual on the tax. The other part of this side, it was the export of the fertilizers, which was produced by the supplier. They sold these products to a Swiss-based company to substantiate their profitability. Actually, fertilizers were moved to Russia, but through a Swiss intermediary company. As a non-resident was loaded, tested, so they have chosen the non-resident, and that everything was okay with pricing. But the tax authority was made a request to a competent authority. They didn't receive information from the company on the financial reporting of the supplier, the absence, and so this information didn't allow to use the non-tested site. So they analyzed the Ukrainian producer. Surely, with such transactions, pricing was beyond the market range to a lower direction, and then that's at the 1.6 billion losses was calculated. So this example will be used just as the most illustrative when it is possible to choose on your own discretion what you consider, either to have a tested site, a method, or it's any of the taxpayers while preparing the reporting should be well substantiated. In case if there are some doubts or some uncertainty, then it's better to add with another method, but not to refuse that method which is more fit for the transaction. That's a kind of. Thank you for your attention. Well, thank you. Very informative. Anna, Russian Ukrainian. Anna, I would ask you to inform about particularities. Thank you. It's my honor to be at the end of this event. Finally, we've been talking about changes in the legislation. I would like to cover a very interesting topic which relates to the raw materials in export-import operations. Mostly, it relates to companies which operate in the agriculture, metallurgy, chemical industry. However, I would say not only that in practice, we've seen cases when companies which are engaged in secondary activities, these were also financial institutions which also traded in corn. This market is volatile. In quite a good margin can be earned with the reselling of different raw materials. I would say that now, as you know, with the new tax reform law 463, the new rules from May 20, approach on substantiation pricing for raw materials has been changed. That is the question. How rules of the game will change? I will say first that it's a positive change. One of the not many positive changes that were expected by the business community since 2015, which was actively discussed at many working groups. And finally, these rules are in effect. And I'll remind you that till May 2020, the past laws were in effect, and after May 23rd, a new law is in effect. What was then? A lot of disputes popped up with tax authorities, what relates to forward contracts. Now, there are such positive changes of the source, choosing the source information and defining the period, the date, and the transfer pricing. What was not earlier in effect, and at that great many disputes appeared, and most of them were to the advantage of the tax authorities, but we'll hope that new rules of the game will make a positive contribution, and there will be less such disputes. What has changed? Earlier, in the past, there was a resolution of the Cabinet Ministers on exchange-listed commodities 516, which regulated the entire list of these exchange-listed commodities, and of course exchanges that should be used for substantiation the price. After May 23rd, the concept has been changed. It's no more exchange-listed commodities, it's already raw materials. The Cabinet Minister should devise a list and announce the list of these raw materials. So far, there is no such list, but it is expected that in the next month or two, this list will be promulgated. And
as well, this is not exclusive list. Is not recommended, but it will be published by the tax. So in fact, the business uses this. We're not speaking only on the exchange, but as well formal things. As well, the lawmaker provided for clear regulations. Again, if the company has internal non-controlled operations, then these operations could be used. You need to understand clearly that there are certain additional criteria to justify these. First of all, that the company in these non-controlled operations and transactions should at least be two counter-agents. If before it could be only one non-controlled operation, and to compare now it is not enough. And secondly, this type of non-controlled operations that should be regular. Third criteria, the volume of important non-controlled and controlled operations should be compatible. As well, some subjective evaluation like volumes, compatibility, etc. Again, if payer don't have these non-controlled internal operations, then you may use quoted price. So we are speaking about the method of comparative compatible non-controlled prices. It is priority for this type of goods. And second positive issue here I already mentioned is that now there's an opportunity to analyze two approaches to analyze prices. First, if the owner submits a notification to tax agencies, the same procedure as for forward contracts. It signs a contract, fix the date of signature, and no substantial changes to be amended to this contract, then this is the right way. If the payer does not send this notification to tax authorities, or his actual circumstances not in line with real circumstances, then unfortunately we need to analyze prices at the moment of ownership transfer or shipment date. So payer may exercise this approach itself if it is timely for him, or if any infringements, the tax authorities could use this approach. Another important thing here, the method of non-controlled price for raw suppliers is in place, but in some cases it is not applicable. Then identified in certain documentations by the company, and then some other methods based on net profitability or gross profitability must be applied to this case. But in that case you must show the profitability of all the counter agents, and you must fix it in the documents. So before it could be instrumented by an independent notification of the tax authorities, now you should not do it separately. Everything is documented by means of transfer contract. And as I mentioned in the very beginning, until now we don't have this type of lists. Legislation is since 23rd May, so there could be certain conflicts and disputes. So we recommend first of all to develop the methodology of pricing, what date, what data you use if we are speaking about the transfer pricing. Secondly, of course, you should put everything into black and white in the policy of transfer pricing. Policy is a very interesting tool, because it gives you say good expectation of next steps, because you then understand what type of risks you have, what type of risks you don't have, and you probably have certain disputes with tax authorities, certain good tool not only for raw commodities but other types of products as well, because you understand how the profit is distributed inside the company, and this is not a very acute, say, task. Then the problem could start. Third, to prepare proper documentation, describe everything, methodology, approaches, methods, comparable and controlled price or other methods, and not to forget the notification to tax authorities if you compare your prices. Sign the, because unless you submit this notification, then the tax authorities could calculate everything according to their. I won't take more of your time because we have a cocktail party. Of course, we may either discuss them, but best if we discuss this personally in the cocktail party time. All the presentations are available in the website. You may ask organizers individually and they send you all the presentation. Thank you all the participants, all the speakers, our guests. I hope that everything was useful and interesting. Somebody probably this is very interesting because life is constant changes and everything that is stagnated will die. That's why I wish your business to be prosperous, developing and growing. Us, organizers and speakers, will help you in that. I invite you to share this evening cocktail party with jazz music. Thank you. Thank you, Julia, for this opportunity to discuss today and to do this networking exercise.